Good morning, everybody. How's everybody doing, man? Welcome to Boot Camp Day 2. Welcome to Traedz TV, where we discuss all stock-related content and much more. Thank y'all so much for joining me, man. Here we are with part 2 today, guys. We're going to be taking more deeper dives today as far as going into more live trading and figuring out our game plans, how we're going to execute today, how we're going to exit today, trying to understand the patterns, which way the market is going, whether it's going up, whether it's going down, and we're just going to keep that on watch. So what we're going to do right now, guys, we're going to go ahead and get started. We're going to jump and take a deeper dive into the earnings, into the economic calendars, and then we're going to go into the charts, guys. So let's go ahead and get ready to rock and roll with that. Let's go. All right, guys. So yesterday we had the main anticipated stock that we was looking into, and that was Nvidia yesterday with earnings that came out. As far as today, guys, all we really have is just some retail companies and tech companies. We have Best Buy that already came out, Dollar General that all came out before the market opened. We do have Dell. I don't see anything else really major that's coming out afterwards. The only one I see for sure is Dell. But other than that, like I said, we are out of the way, out of the main blue chip companies, so that's out of the way right now. So right now we're in the clear. With that being said, let's go ahead and look into the economic calendars today. Let's go ahead and close that out. As far as today, 8:30, we did have the initial jobless claims that came out as far as with GDP. And much more, guys. So we're just taking a look at all of this. Tomorrow we will have the core PCE data that's going to be coming out and the Chicago PMI data. So keep that in mind. So, without further ado, guys, let's go ahead and take a deep dive into our charts to get ourselves geared up and see on how can we knock everything out, guys. Let's go. As far as today, guys, we will be going over the pre-market prep. We're going to be going over options trading. We're going to be going over entries and exits. We're going to be going over the market up and down, and we will be going over candlesticks. How we can look at it, how we can utilize these candles to the best of our ability. So we're going to be doing that. As far as right now, we do have a movement on up. You can see clearly off of this 554 on SPY that we did have that bounce and then movement back on up towards the upside, towards that 560.50 that we still have not broken out yet. You can see right across the board that every time we reached up to that 560.50 that we continuously keep getting rejected at that specific price point. So we're gonna keep that in mind, and we're gonna keep that on watch to see can we get these buys to break out of that 560.50 and push on up towards the back up towards the 562s, or will we get rejected at 560.50 and come right back on down? So we want to ask ourselves right now. We do see an uptrend, so let's go ahead. We did break out of that downtrend setup from yesterday, so we're going to take that off. And what we're going to do is we're going to take a more deeper dive into more of an uptrend than a downtrend at this moment until we crack it. So that's what we're going to keep on focus, because that's what the market is telling us right now, that we are on an uptrend and somewhat of an ascending triangle pattern for a possible squeeze. If the buys can step in for that push above 560.50, back up towards these highs of 561.44 up to back up to 562. So right now the market is telling us from yesterday, after we got that nice little pullback, we did recover around that 5. You can see right here around that 554 that we did recover off of 554 and been on an uptrend ever since. After I was going into pre-market right now. So right now the market is showing us that buys are stepping in. The buys are right now in somewhat in control, because we do have more green candles than red candles. So it is showing a lot of buying activity right now, but we're going to see if they can continue the momentum. What's up, Ed? Good morning to you. What's up? Good morning, good morning, good morning. Thank you so much for joining. But yeah, right now, that's what the market is telling us right now, that we are on an uptrend right now. But we will see what's going to happen at this 560.50 mark. Can we get that 560.50 breakout, or will we get stuck and actually crack the uptrend and start going back down and kind of almost seeing like a repeat of what we seen yesterday. So let's keep that on watch to see can we go back towards these highs here. So all we're doing right now, and that's how I prep myself up. All I do is take the previous day and match it up to today, because what I want to see, especially if it's an area that we could not break out, the challenge today is to outdo yesterday. So meaning that we have to break out, and we have to break these key levels to see higher prices. So we have that key level right here, because you're seeing pre-market yesterday where we got rejected and came on down. We still have never came up to that area and broke out. So we got to utilize that. Right? We have to utilize this area as well. We have to utilize that 562.23, and we have to also utilize that 561.44, and we also have to utilize 560.50. Why? Because these are the levels that we have not broken out yet. We're underneath it. We're getting stuffed. So right now, the first one that we need to break out is that 560.50. From that point, we have that 561.44. From that point, we have 562.23. So right now, we are on an uptrend, and we want to see what these buyers are going to do. Can the buyers give us that breakout? If we could get that breakout of 561.50, then we can utilize that for support during a pullback for a possible bounce. So what we want to do is just keep that on watch to see where we go from here. We don't want to just jump into the market blindly. What we want to do is we want to pay close attention to details as possible. So what we want to see is can we get that 560.50 breakout? That's the main thing we want to see, because right now we are getting stuff underneath that, and here's where your highest red candle at is right about here, and that's the open of 560.15. So what we're going to do is utilize that little area. We're going to make a duplicate copy, because we're going to take this little candle here, because we have not broken that out yet. So we're going to take that. We're going to take 560.15. 560.15, because you gotta remember that's the last candle in pre-market right now. So we got to utilize that until we can break out. So right now, you can see right here, right where that red candle is, we have not broken out yet. We got to utilize that pre-market area, that area that you got stuck. You got to take that into consideration, because you have to ask yourself, why is that specific number so important that we cannot break out? So you have to keep that in mind. So right here, that's going to be an area of resistance. as well as that 560.50. So look how many areas of resistance that we have above our head. We have that 560.15, because you can see right here where we got stuffed at. We also have that 560.50, which is the half dollar mark. That's a natural support and resistance, followed by 561.44, because this is the area that we got rejected hard and came on down. This is where your bears came in major aggressive. So that means something to these bears on why they're protecting that level. So you got to keep that in consideration. Following that, you have 562.23. Let me move it down just a little bit more. Apologize for that. 562.23, because this is the area that we got stuffed at in pre-market yesterday that we could not break out. So we have to take these areas into consideration. Even though we on an uptrend, we have to take into consideration of these major areas that we have not broken out, because you can see here every time you go up, you get rejected right back on down. So we know that those sellers are trying to protect these key areas, because what they're trying to do is they're trying to make the market itself lose value. So if you're going long, the main focus and the main goal is to gain value, not lose value. So that's why we want to keep our eyes posted to see, can we get this pre-market breakout out of this area that we got stuffed at, which is around 560.15 up to this 560.50 mark. So these are going to be the main two areas that we need to break. Right now, we are in an ascending triangle, somewhat of an ascending triangle pattern. We are on an uptrend after that pullback from yesterday, where we did recover off of that 554 and started to push right back on up. So right now, the challenge is, can these buyers push and basically take out that 560.15, basically back up to that 560.50. So we definitely want to keep this on watch to see what these buyers are going to do.
Jay, why do you use the body and not the wick of candle?
Because to me, the way I look at it, boss, it's all about the close. That's how I look at it. Yeah, we got those highs, but it's all about the close, because if you notice, you have the wick, but that selling pressure is pushing that body of the candle down, right? So that means that's where your actual close is at. That's where the area of resistance is at. So yeah, you do have a high where the wick is, but the body itself is getting stuck at a certain price point. So with that being said, that means the body itself can't cross a certain price point. That means it's being guarded in some type of way. But you have to ask yourself, why is it being guarded? Why are the bears protecting this area? So that means, like here, for example, where is that? You see right here, we have, you notice how we have that upper shadow? Let me go back a little bit. Let me take these bubbles off. Sorry about that. All right, but pay close attention. See, like I said, if you look at the upper shadows, the impact really came from being stuffed down. See, you hit this area in pre-market right here, this little small candle. Look at this, and you come right back here. You came right back under that same price. The same price that you can break out in pre-market right here after this little bounce. You notice that? And that's all due to the what? That body of that candle. Because you can see right here on this green candle, stuffed. You can see right here on the red candle, stuffed. And you see how they're kind of lining up right with each other. So that's letting you know that 561.44 is a very powerful area that the bears are guarding. So yeah, we have an upper shadow here. Yeah, we have an upper shadow here. Yeah, we have an upper shadow here. But look where the impact came in at. The impact came in at the area that we could not break out. We couldn't break out here. We couldn't break out here. And look how super aggressive those bears came in. Look at that. They came in after the stuffing of those candles, because we couldn't cross over that area. So notice that. So think about it. That's kind of like a border, kind of like a field, right? Because if you notice, yeah, your wicks are crossing over this red line, but the body of the candle isn't, right? So if you notice that, the wicks are crossing the red line, wicks, but none of the bodies of the candles are crossing it. See that? Green candle, the body can't cross. Red candle, the body can't cross. So if you notice, none of the candles are closing above it. That's why I look at the bodies versus the wicks half the time, because it's about the opens and about the closes. Because had we would have closed the body above that red line, that would have created support. So that means that once you would have pulled back on once that next candle came in and you pulled back right to that red line, knowing that you closed on top of it from the previous candle, that would have been support. So that means right here, let me draw it out for you on what I mean. So had the candle, the body, had after this green candle here. Now, say for instance this red one was actually green, right? And we closed the body here. We closed the body right here. But then once that next candle came in, you got a little pullback. Now you can bounce off that what? That 561.44, because now you can utilize that for support. But if you notice, we couldn't utilize that for support because none of the bodies of the candles could stay above that price point. So that means that once you close underneath it again, That's automatic resistance. So that means psychologically these sellers, these puts, can take advantage of that opportunity at that 561.44, and they did. So once you came back underneath that 561.44, look what happened. Fall, fall, fall. You caught that nice pullback all the way back down. All due to what? Because you couldn't cross this area here. This area was guarded by bears. Same thing here. You notice how the bodies is not trying to, they couldn't cross over this little key area. What happened? Fell right back on down. That's why I take the bodies into consideration versus the upper shadows and the lower shadows. I always take the bodies because it's all about the opening closest to me. So we go back this way. Let's see. So watch. So I'm gonna show you for example. This is a 30-minute time frame. So let's see what the body of this candle is gonna do at this at the area of this red candle. Watch. Let me show you how important it is. You're gonna see exactly what I'm talking about. So the goal is, can we get the body? Yeah, no problem, Liz. But look, notice, because if you notice, look, it's just flat. Everything is flat underneath that line. Here we go. Now watch. Let's see. Can we get the bodies to close above that white line, above 560.15? Because what they can do is, once that candle closes out and the next candle rolls in, that next candle, once you do have a pullback, you can now utilize 560.15 to bounce on top of it, because now it's considered support because you're above that price point. But see how you have an upper shadow, you come back on down. Upper shadow, come back on down. Upper shadow, come back on down. But you have none of the bodies closing on top of that white line. See that? See how you're still having trouble? You're not even being able to cross above it and close. So we're gonna keep this on watch to see exactly, can we get that body to close right on top of it? Because then now they can turn this into support. Because that means that the buyers, the bulls, are claiming that territory that the bears were claiming. So right now, the bulls are trying to claim that what? 560.15. So once they control that, that means the bears have no more control over that level until you're right back underneath it. So right now, you can see the body of the candle is trying to close above that price point, trying to push up to 560.50. That'll be your next target. So all we're doing is keeping it on watch to see if these buyers are gonna push, hold above that 560.15, close it. So once the next candle comes in, they can utilize that for possible support. So that's what we want to keep our eyes peeled on to see. Because right now, these are 30-minute candles. So we're going to see what's going to happen within this 30-minute time frame. But you notice, see how you're getting a little push, but the body itself is struggling. You notice that? The body is struggling. So that means that it's green. So we need it to close on top. So that means that we are closing on top. That means we're trying to gain more momentum. We're trying to stay above 560.15. Because if not, if that body goes back underneath it, that means psychologically those bears are going to utilize that price point to pull you back down again. So if you notice, look at it. Look, see what I mean? You got upper shadows, but look at the bodies. The bodies that green body is matching that red body. It's matching the same candle right on the side of it. Because psychologically, that's where those bears are sitting at. Those bears are sitting in that level. That seller pressure is trying to push you right back on down underneath that white line. So watch how they just slowly battle. Let's see if the bulls can take that price point away from those bears. So just watch it. Keep it on watch. We're gonna keep it on watch. Right now, still on the uptrend though. Still on the uptrend for a possible ascending triangle squeeze. So let's just see what happens. Can we get that push, or will we get rejected right underneath that 560.15 again and come right back on down? So let's just see what's going to happen. Keep it on watch because we want to see, because we have to get above certain price points to hold it to see more upside. Because we don't want the bears blocking you from getting back up to 560. We don't want the bears blocking you from getting back up to 561.44. We don't want the bears blocking you from getting back to 562.23. Why? Because how are we going to get to the next level if we keep getting hammered down by the bears? It's all about territory. So right now, 560.15 is the bears territory that the bulls are trying to take over, because they're trying to turn that resistance into support, where they can utilize that to bounce on top of it to move to the next level. So that's why I'm just carefully watching this to see, can we pretty much engulf this red candle to show that the buyers are trying to take over this price point back up to that price point of 560.50, because we're trying to move on up. We're trying to see the market going up, not get declined and go right back on down, kind of like we got yesterday, how we went up and then you got shut right back on down, if you notice that. Because why? We could not break out that key level that the bears are protecting. They're guarding 562.23. So even when we go back to that key level, you got to keep that specific price point in mind. Because again, if you notice across the board, none of the bodies of the candles are crossing over 562.23. So if we do get back up to that key level, you have to keep that in mind psychologically, that those bears know for sure that that's an area that is well protected by them. So psychologically, a lot of those buyers, or I'm sorry, sellers are going to try to move in that same specific spot. So keep that in mind. So you got to utilize this area as we go back this way, because that is being heavily guarded. You've seen the impact of these bears on what they did once you hit that key level. So as we go back that way, you already know what majority of these sellers are sitting at. They're sitting here because they already knew that this is an area that the bulls cannot break out, which caused the pullback. So as we go back that way, psychologically, you got to think about an area that we have not broken out yet. So we have that key level, 562.23. And we also have this level of 561.44, because you can see the impact. You see the impact from that 562 level. You see the impact from that 561.44 level. So you got to take these two areas in mind. You got to keep these in mind. So that's what we're going to watch. So right now, the market is showing that we are on an uptrend, but we have to break out these key levels to continuously move up. So we're going to keep it on watch. And right now, Nvidia is holding up on that 120.86. Right on 120.86, trying to create a pretty much a rotation. It's trying to create a rotation, but do keep in mind you do have that 50 that's right above your head, sitting around that 124 is mark. We have it sitting around 124.45. So we will have that resistance sitting up here. So keep that in mind.
Do you always use the 30 minutes time frame for support and resistance?
Yeah, and the reason why, and Liz, the reason why I use it. And the reason why I like it is because it's giving you more, kind of like more details, because each candle takes 30 minutes versus a 3-minute time frame, which is only 3 minutes, a 5-minute time frame, which is only 5 minutes. So you have to think about 30 minutes per trading, within each candle. So it's giving you more depth and more detail. To let you know, okay, how strong is the resistance, how strong is the support, how strong are the buyers, how strong are the sellers. So as you can see right here, off of these 30 minute, this is what we used yesterday to call out our play, because we seen a downtrend setting up automatically. So what do we see now? We see more of an uptrend, right? I mean, you can see it on a 3-minute time frame, but it looks a little bit more cluttery. You get what I'm saying? Like on the 3 minutes, like a lot more candles. You gotta squeeze, you gotta minimize your chart just a little bit more to get full depth, when you can just use the 30 minute. 30 minute, I mean, it's a smaller frame. It's more easier to read. You can clearly see a lot more versus just seeing this, because it's just like a lot of clutter. Even though we can see the pattern, but you get a way more cleaner look with a 30 minute. Now you get what I'm saying? Like it's way more cleaner. It's less candles being used. It looks more organized, if that makes sense. You can see a way better pattern. Everything just look way better. So even if I was to go back, see this? I can clearly, with a 30-minute time frame, I can clearly see just patterns, channels, uptrends, downtrends. I can utilize this to the best of my abilities to see overall patterns, whether I have to use, a week ago, this week, to get a better idea where the market is going, right? So that's all I'm doing. And that's why I love using 30-minute time frames, because it just gives me a more deeper dive. Now, I also will use a 180 chart as well. I use the 180 chart too. That's also a good one to use, and I'm gonna tell you why. So if I go back to my 180 chart, you can also see patterns on that as well. So I utilize that a lot. So I'll take my 180 and I go back here. See how I can utilize this to the best of my ability, so I can get an overall look, where the market is going, the strongest resistant areas where I know sellers are moving at. You can clearly see this. That's why I got a bubble here and a bubble here, which is around at 563.97, because you can see right here we had that massive drop on down, and then down here we had that massive move right back on up. So you could clearly see the rotation from tops to bottoms, from bottoms to tops, but you're still at that same key level that we cannot break out. None of the candles are crossing over. That's how powerful that resistance line is in general. That's how heavily guarded by bears this area is. So it can let me know psychologically, like, to not chase that area, or to go for a possible put. So like a lot of these time frames give me a lot of more breakdowns to everything. So we definitely getting a pullback on Apple. Apple definitely got that pullback, then you bounce right back on up. Let's look at Apple. I'm gonna keep my eyes peeled on this. Yeah, because we were talking about crossing over that 230 level. So right now you are above 230. on Apple. So keep that on watch. Nvidia is still holding. Remember, guys, we lost that 126.88. Remember, we fell underneath that key level. Now we all the way back down to the 120s. That I possibly told y'all could possibly happen. So we did lose that 26.88. I told y'all, once we lose that, we can see a deeper pullback down, in which we caught it yesterday. So you can clearly see that. So let's see the overall look on Nvidia. So let's hurry up and utilize this real quick. So let's see on how we can get an idea. So let me, so we came out of this, so we don't need this no more. We don't need that channel anymore. It's dead. That's a dead pattern, a dead channel. We don't need that no more. So let's see how we can utilize today setup. Let's see. So right now it looks kind of downtrendish to me still. So it looks like a downtrend setup. So we can clearly see that. Let's see how we can utilize the bottoms though. Utilize this bottom off of this key mark here, and you should have a middle somewhere as well. Somewhere like right in this little area here. So let me take off. Let me see. Let me use. All right. I'm gonna try to clean it up a little bit. I apologize for all the lines. It's because all the choppiness. I try not to use so many lines, but just due to the choppiness, it just drives me nuts. So let's see. Right now, it looks like we on somewhat of a downtrendish like pattern. So you can clearly see it across the board. Even if you don't use this one, and we just take this one off and just focus on just this setup, you can clearly see you in this little channel. You can clearly see you on this downtrend channel. So what would need to happen if you're going long? We need to break out of that. We need to break out of this downtrend setup. That means that we need to get over that 122.50, 122.50 back up to this 124 level. So we need to break out of that level to get us out of this downtrend setup. If not, we're going to continue a downtrend on down. That means that we're going to lose more footage, especially if we lose 120. We lose 120, we're going right back down into the 117s, back down to the 115s, back down to these lows. So we want to see, can these buyers break us out of this downtrend setup? If not, we're going to continuously hit this trend line, get rejected, which is lining up right with that 122.50, and come right back on down. So keep that on mind, keep that in mind, and let's see what happens with this setup to see on what these buyers are going to do. So I definitely want to keep my eyes peeled to see what these buyers are going to do. Can we get that 122.50 break for the push back on up towards the upside, or will we get rejected and continue the downtrend down this way? But you see how I can spot patterns easily. Like to kind of give myself a good idea of which way the market may be going and how to set myself up better. So that's why I use different time frames, guys, to help me out, to give me a better look, you know, kind of get a feel. So you see right here, boom. Let's take a look. All right, Liz. All right, you've been watching my chat, watching my video. Have I ever moved my green line? Have I ever moved my green line? Right at that five. Any of you, one of you guys, have I ever moved that green line? 560.50. Have I moved it once?
Liz Rosa says, no.
Exactly. Look where the market hit and fell. How did I have a possible line to kind of have an idea on what was going to happen? That it was going to hit and then start to pull back, that we was not going to break out. See, you notice that? It's all about understanding the setups. That's why I had my line here, because I told you, if we couldn't cross that 560.50, boom, you'll get pulled back. So you can see right here, we tested it. Then you fell underneath what? 560.15. We still have not broken out of the 560.15. We still have not broken out of the 560.50. So again, those bears are guarding here. 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 So you notice we're getting another long upper shadow, which still looks a little weak right now. So let's keep that on watch. So that's what I meant. Now you see what I mean about the bodies of the candles, because the fact is you're not getting the bodies themselves to close above certain price points. Because had we would have popped up and closed above the 560.50, I guarantee you we would have been seeing more upside than downside. So if you notice, we hit, but we never closed. We didn't close above these key levels. We closed underneath it. So keep that in mind. So if you notice, we're right back in the same little area right here that we cannot break out. See that? Here, 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 right back underneath that white line. So you notice that the buyers still don't have enough strength to hold. So keep it on watch. We're going to see. We got 3 minutes until the bell rings, guys. Got 3 minutes until this candle closes out and intraday begins. So let's see. We got an idea on pre-market, right? We got an idea on pre-market the area that we cannot break out. So let's see. Within 3 minutes, can the buyers come in and give us that push before the market open and actually get on top? Let's see. Let's see. Can these buyers move in within 2 minutes? Can we get them to close on top of it? Let's see. It's all about the way this candle closes out, the way the next candle is going to feed off of it. Sorry about that, guys. My chat box keep disappearing. I'm trying to keep it on just in case people hit me up. Marty, what's up, boss? Engineer, I see you in the building too. SMCI, let me go to SMCI too real quick. Ooh, you heard me try to do this as quick as I can. SMCI. We definitely got to break above this key area here. That is around 44. I'm sorry, 443.58. So we got to definitely break above that key level. Right about here. You clearly see that where you got stuffed at and you fell right on down. So let's see, can we get a possible squeeze out of that area? So we're gonna keep it on watch. So what was it? Was it 58? I think, if I'm not mistaken. 58. I think it's, yeah, I think that was it. 58. Yeah, 58. So just keep that on watch, engineer, to see can we get that breakout above that key level for SMCI. What we got left, guys? We got about 40 seconds left. 40 seconds left to see can we get that possible, because it looks like it's setting up for a possible like some type of like an uptrend, but let's see can they feed off of it. Let's see if these buyers are gonna utilize this uptrend and get that push above that 443.58. So that's gonna be a key level here to here. That's gonna be the area that we need to break out. Can we break out and hold, or will we test it and get rejected and come back on down? So here go your buyers once again stepping in right there. They reclaim the 560.15, trying to get that break of 560.50.
Do you trade multiple tickers?
I mainly just watch SPY, like blue chips. Nvidia, Tesla, Amazon, Apple. We got about 4 seconds left. 3, 2, 1, guys, game time. So let's keep our eyes peeled at this level here. Can we get these buyers to actually break out and hold? Keep it on watch. 560.50. Look at that. Look. We just went off. My Apple alert just went off. Look, Liz. Look. See what I mean about the open and the close? Look at that. Same area again. Look, right here, 560.50. Here we go, 560.50 again. Let's see, can we get them to break out? Can we get these buyers to push before these bears come in aggressive? We have not crossed that green line yet, guys. We have not crossed that green line. We're still getting stuff underneath that green line. This is the area that the bears are heavily guarding right now because they don't want the buyers to get to the next level, right? So we have to take out 560.50. Utilize that, turn that into support so we can see more upside. Right now, they are heavily guarding 560.50. So if you notice that, look at that. That candle turned red real quick as soon as that bell rung. See that? Now keep that on watch. That's how you start to understand these patterns, guys. That's how you start to understand the setups. So as we do pull back, we have to ask ourselves, will those buyers utilize this trend line to bounce on top, hold, and move back up? So all we're doing is watching this uptrend. Can the uptrend hold? Do we have enough buyers? Do we not have enough buying strength to utilize this uptrend to push back up towards the upside? Or do we have more selling strength to take us out? So let's just see. Keep this on watch. Keep this on watch. Keep this on watch. All I'm doing is watching this 30-minute time frame to see who will be more in control between the bears and the bulls. That's all I want to do is keep my eyes peeled. So all we're going to do is utilize this green line because this is the area that the bulls need to cross to gain more momentum to take away that territory for the bears to push our way back on up. So can we get that push or will we get stuff underneath again? So let's keep that on watch. And all I did was utilize yesterday's movement going into today's movement, that which if you put them together, it gives you an uptrend. That's it. That's all I did. So all I'm doing is watching this setup. I want to see what these buyers are going to do. Right now, they're still fighting. Now you're back down underneath that 560.15 that we called out. So we're just keeping this on watch. Between these two key levels to see right now the bulls have so far claimed the 560.15. So can they claim the 560.50? Can they get that push above 560.50 and hold that key area for the movement on up? Right now, uptrend is still going up. Here we go. Uptrend is still pushing. Because I just want the bulls to prove to me that they have the strength to take territories back away from the bears. So right now, here go the push. 560.50, we need to hold. We need to hold above 560.50. But you see how I can easily read these price points like in an instant. All I'm looking at is a few price points here and there to kind of give me an idea of whether we're going on the upside or whether we stand on the downside. That's all I'm doing. I'm just watching these price points carefully, guys. That's it. Carefully watching these price points. Can the bulls push or will we get stuck underneath 560.50 and come right back on down? See what I mean? See? All I'm doing is watching 560.50. That's all I'm doing, watching specific price points to let me know, okay, we are continuing up, or okay, we are getting stuck and we may be coming right back on down. That's it. That's all I'm doing. So right now, we did break that engineer. We did break that 543.58. So we did break that. So we did break out of that key level. But you notice that ascending triangle squeeze? Look how I created that pattern. Ascending triangle squeeze. There you go. So we broke right out of that 543.58. Boom. There you go. So right now we're pushing off of that ascending triangle squeeze. And remember for NVIDIA that we need to stay on top of 122.50. We need to stay on top of 122.50 to get us out of that potential downtrend channel. Right now, SMCI is moving good by itself. So let's keep that on watch. Right now, you're still battling around this 560.50 on SPY. Still battling around that key area. Can we get that push? Can we hold above that key level to move to the next level? After that 560.50 is claimed on the bull side, you already know the next level after that is going to be 561.44. And as we do move up, what I'm going to do is I'm going to minimize this so we can see why. We're going to go back here. We're going to go back this way because we're going to use the pass. Yesterday's area of resistance that took us out. So we want to see on how the buyers are going to react as we get to this level. Once we reclaim that 560.50 and hold, this will be your next level. We break that level, 562 will be your next level after that. But right now, overall, uptrend is holding. Pattern's looking nice. You're starting to get that squeeze out of NVIDIA. Here we go. 522.50. That's getting us out of that downtrend for that pushback on up to 125. Keep that on watch. So right now, everything is still looking good so far. NVIDIA's getting that push up to 125. Let's put that alert here. That'll be the next intended target. So I'm going to set an alert at 125 to see can we get that 125 touch. So let's see. So that's all I'm doing, guys. That's how I just try to figure things out. Like, I don't jump in immediately. Like, sometimes I may go in early, but it all depends on the setup in pre-market. That's normally how I do it. All right, got to set up here. And right, let's see. Let me see. What can we do for SMCI? What would be that next goal that bad boy is trying to go? Let's go ahead and put 480. Let's put 480 on that bad boy. That'll be the next intended target for that. 480. All right. All right, 480. Target. All right. And for SPY, we're gonna set up a target for, what is that? 561.44. 561.44. That's the next intended target for that bad boy. All right, let's see. 61.44. So we got three targets set in motion right now, guys. So we're gonna see which one is going to hit first. All right, 60.44. So let me take off this red line real quick. Let me come on, this thing's act up. I hate when it do this. All right. Yep, cool. So we're gonna just utilize. Yep. So this is gonna be an intended target here to start off with. I got a target set for SMCI for 480. Cause it looked like this area is what 480 what? 480.57. 480.57 be your next intended target here. So I got my alert set for all of these guys. I have my alert set for NVIDIA, and I have my alert set for SMCI, and I also have my alert set for SPY. So right now, again, all I'm doing is going off of the pattern. Right now we're on an uptrend. Right now I see more buyers than sellers because I told you see the candles, how the candles converted over. Yesterday you could tell it was all sellers because you could see right here that it was pretty much bearish because you had way more red candles than green. Now we started to transition over to where now we're seeing more green than red. So that's letting us know now the bulls in control. And remember we talked about this, guys. We talked about it with the E-League. Remember that? We talked about it with our first lesson. What was that? Right here, guys. I told y'all that the market will transition through 4 states. 4 states that the market will transition to. You have trending state, you have a ranging state, you have a breakout state, and you have a reversal state. So with that being said, let me ask you guys this. Okay? Looking at this pattern here, before the bounce, looking at this pattern here, guys, out of the 4 states, what state was this? Remember, the market always goes through 4 states. So by looking at this movement in the market here, what state is this right here? What state is this right here? Because I want to make sure you're on top of it. What state is this right here, guys? What state? Exactly. Okay, you got it. Now, what is this state?
TED says. Reverse.
There you go. So far we identified trending and we also identified a reversal state. Now, what state are we in now again?
Liz Rosa says. Reversal.
Exactly. So what state are we in now? From after I was going into pre-market, we on an uptrend, yeah. So we in a trending state, right? Exactly. Trending. So you remember, so all you do is keep in mind the market goes through 4 states, guys. That's how to always understand the market. The market is going to either go through a trend. It don't matter if it's an uptrend or a downtrend. It's still a trending state. Half the time when it's choppy, what is that? A ranging state, right? Ranging state. Then you have an area that that SMCI just did. Okay, what was this? What state is this that SMCI is doing, guys? What state is this? From here to here, what state is this? All we're trying to do is identify every state right now. From here to here, this move that's happening right now on SMCI. See? 4 states. Exactly. But y'all see that the market just all it does is go through 4 transitions. That's it. That's how to easily understand things. It's either going to be a choppy day, which is going to put you in a ranging state. If the market is either going to go up or go down, which is a trending state. The market is either going to reverse, which is a reversal state, or it's going to go to an area where you're going to break out. It's going to be a breakout state. So all you do is once you familiarize yourself with the environment of the market, it's kind of easy to put yourself in the right position to make sure you're not guessing your way through it. So right now we're seeing a downtrend, we see a reversal, we see an uptrend. So all we're doing is keeping that on watch. And again, once you start to familiarize yourself with these transitions, it's kind of easy to understand on how to put yourself in the right position. So once you started to familiarize yourself that this was on a downtrend, okay, I need to go for a put, or I need to go for a short. Now right here, okay, I see more buyers. I see that we're going up, so I need to go for a call. Obviously because the calls are more in control.
When would you enter a trade?
I normally enter a trade like once we get for example, for SPY. I will literally, me personally, I will wait for a 650 break. Why? Because we have to see if these bulls can utilize that specific price point for a bouncing opportunity to go back up towards the upside. Because all it look like the market is trying to do is almost do somewhat of a red to green state, almost trying to go back up towards these highs. So I just want to see if we have enough buying momentum to get us back up to these key areas. So once we get above this 560.50, what I normally do is I wait for a pullback because I want to make sure that they're going to utilize that for support, bounce off of that 560, and then move up towards the next levels of 561.44, 562. So right now we are slowly trying to break, but you're still having a little bit of trouble at this 560.50. So I wouldn't be chasing it until the bulls can confirm to me that they can break over this 560.50. So right now, it'll be kind of a guess because you don't know whether we're gonna break out or not. So I want the bulls to give me confirmation that they're taking over this 560.50 level. So once we do break above that level, and I'm talking about a hard, almost setting itself up in like a bull flag pattern, because you're gonna have that long green candle that's gonna give you a confirmation to let you know those buys are moving in heavy. So now, what's gonna follow that? Gonna get that little small pullback because again, you're having that big engulfing green candle followed by a small red candle. So that's a perfect opportunity to get it because you have more buyers than sellers. So once you start to get that little pullback, that's when I go for that first initial pullback, because normally your first bounce is always normally your strongest bounce. So right now, we still haven't broken above that 560.50, right? Still haven't broken above it yet. So I'm still not convinced that we can get over this 560.50. All I'm doing is looking at one price point to kind of let me know, okay, what to do. We have not broken over it yet. Still haven't broken over yet. Still getting stuck. Right here, NVIDIA, what I called out. You remember I told you, 122.50 we needed to hold. But we'll be back at underneath that trend line. Right now, still watching SMCI to see what we're going on at. But you remember, guys, I told y'all, in order for us to get out of that trend line or that downtrend channel, we need to stay above 122.50. Look what happened. We tested that 122.50, came right back underneath 122.50. Right now, thus putting you right back in that downtrend channel. Look what's happened with SPY. Boom, there you go. 560.50, couldn't get it, boom, pull back. See what I mean? Why I don't go chasing at these like certain levels, like I wouldn't have jumped in on 560.50 until it's proven to me that they can hold or that they can reclaim that level back from the bears. Right now, still getting stuffed. Look at that, another overshadow. And all I did was look at one green line, which is 560.50 that told me we could not break it. Here we go, pulling back. So as we do pull back, will these buyers hold this trend line for the possible movement back on up, or will these bears come in aggressive and yank you right back underneath? That means you will have to lose, 559? Yeah, 559. So, right now, thus putting this in a channel, look like, because this area here is the area that the bulls are refusing to let the bears crack, right? So that's how we can look at it from a channel standpoint, even throughout this trend line. So right here, we know this area cannot be broken out. And we know down here, this area cannot be cracked. Why? Because you don't see none of the bodies of the candle crossing it. So we're going to take that, utilize this for now. Right about here. Go across the board. Right about here. So we see, come on, this thing be acting slow. I swear it do. So right here, we can clearly see where our tops is. Down here, we can clearly see where our bottoms is, because you pulled back, buyer stepped in, pushed you right back on up. So we see our channel for sure. So let me change the colors on that too. Put green for support. So we're gonna change that out, because that'll be support, and then we're gonna keep this red, because that is resistance until we break out. So let's see. All right, boom. So we got our little channel set up right now, because again, we cannot break out, nor can we crack down. So we kind of somewhat in this little channel right now, because we cannot break out of these certain key levels. So keep that on watch. Let me see. See how you're going right back underneath that? Let's see. See what these buyers gonna do. Can they hold? Can they hold? Because right now we're still on the uptrend. Still on the uptrend. So I just want to see if these buys can hold these key levels before these bears take them out. So right now you got an upper shadow. You still cannot break out of 560.50. Still can break out of that key level. So we know that's going to be a strong territory guarded by the bears, because you have not broken it yet. So we know that area is heavily guarded by bears. So as we do come down, can the bulls remain holding this 559 level as we do possibly pull back to that level? What is that, 15? So let's see. Right now we're pulling back to it. Right back to this, possibly, basically, almost back down to this key level. Let's see. I'm keeping on watch. Keeping this on watch, guys. Because you got to remember, overall, the trend line is still holding. The trend line is still holding. So you got room to fall. You got room to pull back down. Just as long as the trend line holds, that's all that matters. It's because you got room to move back and forth, back and forth, and back and forth until you get into that tighter space, and it makes a bigger move. So right now, you got room to fall back down because you got room to come back on that trend line. So do expect that. You do expect a lot of up and down, a lot of movement back and forth, back and forth, back and forth. So that's going to happen. So right now, again, you got to look at the overall view. The overall view is that we're on this trend line still. Trend line is still holding. Trend line is still holding. It's when you crack it and those bears come in aggressive is when we start to lose momentum. See right here? All I'm just watching. So let me put a little line just in case we do crack.
Would you do a bounce play of Dollar Lake?
Let me see. What was this? 559. Oh shoot. 559.15, right? Yeah, 559.15. Bounce play. Yeah, like I said, as long as this level can hold and the bulls can prove it to me, because you can see right here that this was we already got the first bounce. So can we see a double bottom where we can bounce twice off of the same key areas? That's what I want to see. Keep my eyes peeled. So I'm gonna set my alert here. Let me see for the bottoms, because that's below that key area here. All right. Just keeping this on watch, and I'm also watching because it's also dealing with the market as well. So if the market, if these companies push, it's gonna help SPY push. But right now, I'm still seeing some weakness. Still see some weakness. Because like I said, the overall trend line is holding. It's when we crack that trend line, that's when we start to transition the trend line. We go from an uptrend to now a downtrend, possible downtrend. So right now, as we pull them back, I just want to see if these buys can hold these key levels, because you're going to have 559.50, half dollar mark, back down to this low area here. So you notice 559.50 is always like these 50-cent ranges, because you've noticed, look here, 560.50, 50-cent range. You're trying to bounce off a 559.50, 50-cent range. So if you notice that, come on, I hate when this chat box does this. It gets on my nerves with this crap. So right now, we kind of like, even though we on a trend line, we still kind of somewhat of in a channel, because we have not broken out and nor have we cracked. So thus keeping us kind of going like sideways-ish. So have you noticed that? Just keeping this on watch, guys. Keeping this on watch. See where we go from here. See how those sellers trying to pull back. But you got those buys sitting right around this 559.50. If you lose 559.50, you will pull back down to this low here, 559.15. So right now they hold. Okay, they still holding up this 559.50. So that's holding. 559.50 is holding. So we got some buying pressure all right off of that 50-cent level. Because right now, like I said, right now we still see more buyers. Because look at the overall setup. From after hours into pre-market, I mean, you still got way more buyers than sellers. Way more buyers than sellers. The only thing is the buyers just need to get that break of that 560.50. 560.50. We just got to get that break out of 560.50, guys. If we can get that push of 560.50, the next area they're going for, I'm telling you right now, is going to be 561.44. If we can get that 560.50 break, I'm telling you exactly where they're going to be trying to go to. Mark my words. But we have to break that key level first. We got to break it. See how it's still kind of struggling right underneath this, just that one price point? See, we're still not able to cross. See, but Liz, you see what I'm talking about? How the bodies of the candle still have not crossed over 560.50. Like we still not crossed it yet. Let's keep it on watch. Let's see. Can we get that push and hold above that key level? Can we get these buyers to give us that 560 push? 560.50 push. Here we go. Let's see. Let's see. Can we hold it? They gotta hold it. Gotta hold it. If they can hold that key, what we got left? About 10 minutes before this candle close out. Yeah, about 10 minutes. So, okay, on this 30-minute time frame, what we want the buyers to do is we want the buyers to stay on top of 560.50, because once that next candle comes in, it has some type of support even throughout a pullback. Because once that pullback occurs, as long as this candle can close on top of 560.50 and the next candle comes in and we do go through a pullback with that next candle, we're going to have somewhere to bounce. We're going to have somewhere to bounce, which is going to be what? Around 560.50. Because then once they can utilize that, you'll start to move back on up towards these highs. So here we go right now. So let's keep this on watch. See? Still not holding. Still not holding. It's 560.50. Look at that. See what I mean? Look at that. Boom. See? See, it's just easy to read this, guys. I mean, once you start to just focus on certain price points, and again, you can utilize pre-markets area that you cannot break out, or again, especially when it comes down to SPY, I just use like half dollar marks. I use like 50-cent areas, like, and that's basically what I did. 560.50 still cannot break out just yet. Look at that. Pull back again. All I'm doing is watching this key level that has not been able to break out. That's it. I mean, we can even move it down to where the open is, because look at the open. The open is still, the bodies haven't even crossed the open yet. Today's open was what? Wrong thing. Today's open was 560.31. So I can move this line to that mark. So if I do this, let me take off all of this to get rid of all this clutter. Get rid of all this clutter. So what it was, 560.31. Right with a, watch right here. Oops. Boom. See that? Even if I move it down to where that open is, look at that. Boom. Boom.
I thought you'd miss out on plays using a 30 minutes time frame, but it seems it's safer than using a shorter time frame.
Yeah, but like I said, it just gives you more detail. That's what I like about it. Because it shows me like main areas that cannot be broken out because the candle's so solid. Instead of seeing all of this, I could just look at this and just see right here. Boom, couldn't break out. Boom, couldn't break out. Where? Around 560.31. All I'm doing is utilizing this to show me the areas that we cannot break out. So that's all I'm doing is utilizing these little areas. So once I start to see something like this and I kind of start to utilize those price points, then I go into like my 3-minute time frame to catch like, little pullbacks or, like little candles that I can't see on a 30-minute time frame that I can see on a 3-minute or a 5-minute. So that's why I come in with using that. I mean, but even on a 3-minute time frame, look how the way the market is setting up. It still don't look healthy. It still looks weak. It looked like it wants to just start downtrending. You see the setup already? It looked like it wants to start downtrending already. So I'm gonna just keep it on watch to see. Almost look like it wants to start setting up a downtrend, something like this to this nature. So I'm just keep it on watch. Keep it on watch. That's how I started to figure out patterns. I started to understand the market, the way the market is moving. So I don't get caught in a fake out. Whether it's a breakdown, a fake out, breakout, I always just try to utilize this to the best of my ability. But Liz, you see how clean and clear it is to notice these certain things now when you're looking at a 30-minute time frame? You can clearly see resistance here. You clearly see resistance here, all at just one price point, which is around this 560.31 here. See that? You hit, you fall. You hit, you fall. So that's letting me know in general that 560.31 is a strong resistance area that we cannot break out. So therefore, I can utilize that to go for a certain put, like a certain short. See that? Same key area. I mean, even though we got that little push, what did we come right back down to? Where did the body close at? You got a long upper shadow, but look where the body came right back down to. 5, 60, 31. You notice that?
Yes, 30 minutes makes it clearer.
Yeah. So if you notice, yeah.
Because I get caught in FOBOs.
Yeah. So if you notice, like I said, yeah, we got a little upper shadow here, but look where the candle closed out on the green. Yeah, we got an upper shadow here, but look where the candle closed out on the red. You notice that? They both matching underneath the same price point, 5, 60, 31. So if you notice that, that let me know, in general, that's a strong resistance area. So that's how I start to kind of put the pieces of the puzzle together. So right now, trend line is still holding. So we haven't got like a major pullback yet, because buyers are still trying to step in. Because right now that uptrend is still holding. Uptrend is still holding. Did they bounce out that 559.50 again? Cause all I gotta do is get this breakout. I mean, that's really it. Cause you remember I told you was gonna have room to come. You was gonna have room to move back and forth. I told you guys this. Cause you're in a ascending triangle pattern. You're on an uptrend. So you got space to fall all the way back down to the purple line, as long as you hold it. As long as you hold it. As long as you hold it, it can move back and forth, back and forth. But as long as you stay on top of this purple line, just play it off of that. So pretty much okay. This is what I would do, Liz. Like if I know I'm in an ascending triangle pattern or in an uptrend. Me personally, I like to normally get as close to the purple line as possible, because that's where you have way more. I'll put it like this: it reduces your risk. It reduces your risk because you're getting closer here versus me trying to buy all the way up here when you got room to fall back down. So for example, like if I know I'm on an uptrend, this is what I'll do. So I would like to get as close to these purple lines as possible, something like here and here, because it reduces my risk versus me buying here and here where it can fall back down. So I'd rather get into like lower areas, whether you can also use the VWAP. You can get down to these low areas where you know you got way more reward than risk. But when you're getting up here, I mean, you put yourself in more of a higher risk because we don't know if it's going to break out. It's like I would rather get in, okay, put it like this, Liz. I would rather get away from this area. If I'm going in for a long, I would rather get away from this, right? So I would rather get in on a pullback for the move back up to it. So therefore, I can make whether it's a scalp, I can make a little bit of money. I can make a little bit of profit bouncing back up to resistance instead of trying to buy at resistance. I mean, does that make sense of what I'm saying, Liz? So I would rather buy down here as it moves back here where I can get out, because again, I don't know if it's going to break out, right? Instead of buying right here with my fingers crossed, hoping to break out. Yeah. So I would rather buy down. I would rather get away. You know, like I said, I would rather buy away from it than at it, because again, we don't know what it's going to do. So what I would do personally, I would rather wait for the pullback away from this strong resistance area where I can buy in somewhere like in these areas for the move back up to it where I can exit out. Same thing here. If it pulls back again, I'd rather get in the low area where it can pull right back to it. Because put it like this, you got to treat that 560.31 like a magnet. You got to think about it like a magnet, right? Because you pull away from it, you go back to it. You pull away from it, you go back to it. It's like a magnet. It keeps yanking it up to it. So it's like, okay, if I'm looking at it like a magnet standpoint, I would rather get in. Wow, big green candle. What happened? Wait, let me go back. See what I mean? Watch. I would rather buy away from it, which puts you close to that green line, that purple line. Boom. See that? That's why I say I would rather buy to the bottoms. Because I'll have way more reward than risk if I'm way down here buying somewhere in these areas. Because what you could have done too, you could have utilized this candle here. Now, which one was that? You can utilize anyone, really one of these red candles. We can kind of utilize and bounce. Because if you put this across the board, you see where it pulled down to? Like almost around this candle, old red candles, and utilize that because that's old resistance. Turn this to support. You can do that. Let's see if it's going to hit my target. Let's see if it's going to hit my target that I called out. Let's see. I said 561.44. Will it hit my target? And for NVIDIA. And, well, we haven't pushed all the way back up on SMCI yet. So let me go ahead and let me darken these lines real quick so I don't have too many lines on the board. But that's how I read a lot of these charts, guys. All I do is just try to understand the movements of the market. Again, I was still looking at this uptrend still. It's like as long as we don't crack it, we still got room to go up. So now we did break out this little possible downtrend setup. So far so good, so I can get rid of that. Go ahead and take this off real quick. All right, delete remove drawing. There we go. So yeah, all I did was keep my purple line the whole entire time. I kept my purple line the whole entire time. You remember I told y'all we was in an impossible ascending triangle squeeze. All we needed to do was break out above that 560 area that we could not break out. Now once we break out, that excites the buyers, that gives you that push. That's what happened. Cause Liz, where did that buying volume come from? Like when did it start? Hey, look right at my chart. Where did that buying volume come in at? Where did those buyers get excited at? What did they get excited at? When we did what? Where did those buyers get excited? See that? See where my red line is? Look, 560.31, go across the board. Because you got lower shadow. Lower shadow. But look where the body at. You notice that? Notice how it matches it perfectly? It matches the resistance that you got stuff, and it also matches the support. Notice that? Look at that. Resistance matches perfectly on my red line, and the support matches perfectly on my red line. You notice that? See that? It worked in both ways. My one line worked in both ways. You notice that? It acted up as resistance at one point. Now it's acting as support. Notice where the body of that candle is. Right on top of my red line. 560.31, which those buyers are utilizing 560.31 because that's the area we could not break out. Remember, I told you that. I said once we break out, then they'll utilize resistance as support. Which that's exactly where you see that body at. Boom. And look where they pushing. Boom. Boom. Bah, I told you. Boom, I told you. Put my alert, baby. Let's go. I told you. There go your center triangle squeeze. Boom, boom, boom. I told him. Let's see if it's going to hit my next target. Man, killing him on the scene, baby. Killing him on the scene. Here we go again. Let me see. Well, let me see. 6223. That's that other breakout area we need to break out. It's my other area. Let's see if we can get that touch. I'm also put an alert at that one too. Let's see. I told him. I tried to tell him, Marty. Boom! All right. Right at these key levels here too. Liz, you was my witness. Marty, you was my witness. Didn't I say that once they break above this key level, I said we was in an ascending triangle pattern. I said was holding up on an uptrend. I was telling y'all, I said, look at the setups, guys. I said, did we not go through the 4 stages, right? Did we not talk about a downtrend, reversal, trend? It went from a trending, reversal, trending. I told you it looked like a red to green. It looked like we're trying to go back up towards these highs. Did I not say that? Did I not say that? Did I not call out a red to green? Did I not call out a transition? Guys, I told y'all, did I not call out an uptrend? I said as long as that trend line holds, you're on an possible ascending triangle pattern. So now what it's going to set up to do, I'm going to tell you exactly what it's going to set up to do if everything goes according to plan. It's going to go to the next ascending triangle setup, which is going to be around what? Between that 562.23. Why? Because that's the area that took you out in pre-market yesterday, right? Look right here. Right around this area. Boom, you fail. So that's going to be the next area that those bulls going for, which is going to be around that 562.23. Watch. So right now it's going to be a lot of up and down because you got a lot of sellers sitting right here. Because you already see. Look what happened in the past. Look what happened yesterday. Sellers were sitting here, came in, pushed you down. Boom. Where do you think they sitting at? 562.23. So as we get closer and closer and closer between that 562 to 562.23, those sellers are sitting right here. Sellers are sitting right there. Because all they're doing is utilizing this and bringing it right this way. That's it. That's why you can see they're coming in aggressive. I told them, man. I told them. We caught that first one. That first push. Keep it on watch, guys. Keep it on watch. Right off of my red line. Boom. Got that push. But guys, it's not hard at all to read this. Like again, once you start to put the pieces of the puzzle together, it becomes so easy to kind of read it. Like You kind of know what the market is going to do before it does it. Because before the market opened, what was I calling out? What did we talk about? I said based off of yesterday's movement, yeah. I said the Bears were in control. We pulled back, right? I said, but look what happened after hours when we caught that bounce. Remember I told you guys we bounced right at that 554 and been trending up ever since. What did I call out? An uptrend. What did I call out? A reversal. What did I possibly say we could see? A red to green. I called out everything that I could possibly think of to give y'all help on that. Is that out? Yeah, home sales. Yeah, home sales came out, Jenna. Home sales data. I'm glad you said that. Let me double check to see what was the results on that. It was the new was it home sales or new home sales, Marty? Just home sales, right? Was the home sales data or new home sales? I gotta go back and check 'cause I forgot what it was. I gotta go back and see.
PDH is at dollar link. Is that not par?
At 61.25. Resistance, you mean? Let's see. Right across the board, right about, because we usually get stuffed at right here. Yep, right where you at, this little area. Because you started to reverse right about here. Right, yep, right where you at. So what was this? This was 561.50. Pretty much 561.50. Half dollar, excuse me, half dollar mark. So let's make another duplicate copy. Let's put that in white. That's a half dollar mark. So 561. Let me see. Come on. 561.50. Boom, 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 boom. Boom. There it is. See right here? Yeah. See right here across the board. Look right here from yesterday. 561.50. Rejected. Go across right here. 561.50. So you're gonna have to. So the buy's gonna have to get back above 561.50 in order to get back up to that 562. So your 561.50 is gonna be your resistance. And another reason why it's gonna be showing a little bit of weakness because you already got overextended. Look where your 9 EMA is at. Your 9 EMA is all the way back down towards the 560.31. So it's going into resistance by itself without no help. So you don't have no indicators or anything to give it that push and keep it to stay where it's at. So you may about to occur a little bit of a pullback back down to either the VWAP or that 9 EMA because you got to understand, Liz. The indicators can act like a magnet as well. So just like here, for example, you watch this blue line. Look at the blue line. So you leave from it, you return to it. You leave from it, you return to it. You leave from it. What you think is about to happen? What you think about to happen on that with that 9 EMA, Liz? Think about it. Again, you gotta treat those indicators like magnets, especially that 9 EMA, the blue one. Again, you gonna get overextended from it, you return to it. You get overextended from it, you return to it. You get overextended from it, where you think SPY trying to go? Do I just pull back, Liz? Where you think it's trying to pull back to? Yeah, see? Gonna try to pull back to it like a magnet. See that? Because it's gonna need the assistance.
So yesterday you said you trade only SPX based on spot.
Yeah.
SPX is the opposite.
No. It don't do the opposite. T, it don't. No. You can play a call in it. You can play a call and a put on SPX. No, it don't do the opposite. You thinking of SQQQ. SQQQ does the opposite of what SPY does. That's what you're thinking about, not SPX. SPS follows it. It's just more of a rapider ETF. But no, you thinking about SQQQ. SQQQ does the opposite of what SPY does. That's what you're thinking about. I know what you're thinking about. Go watch, and I can prove it. I know exactly what you're thinking about. So let me go to SQQQ and see if I'm lying. Watch.
Oh, sorry, it's faster.
Look. See? Oh, that's because I forgot to change it. Oops, I forgot to change my link. My bad. That's why. My fault. My fault. My fizzle. Boom! See? You thinking about SQQQ. I already knew what you're thinking about when you said it. SQQ does the opposite. You can clearly see that right here. Look at that. That goes up. SQQ goes down. But no, SPX does the same with SPY. It's just more rapid. See? It goes up too. It's just more rapid. Yep, that's all it is, boss. That's all it is. That's all it is. All it is. Wait, what you say? Did you read my mind? We alike, man. You know this. Come on, Marty. Me, you, and who else? Who else that we all think alike? Is me, you, is it Golden? Is it Golden Paquito or Coldplay? Coldplay. That's who it is. Me, you, and Coldplay. We all think, and AK-47. We all think alike.
Sorry if I missed this. What do you trade? Options on SPX?
Yeah. Oh, yeah. That's what I'm supposed to be doing today. I'm sorry. I do apologize about that. Sorry. So, how to trade options?
He says. So you only do call and puts on SPX, not spot.
Yeah, cause I mean, you make a lot. You make way more money than on SPX than SPY, and I'm gonna show you why. So, let me bring out a chart. I'm gonna tell you why. I'm gonna show you the difference. So, I'm gonna show you the price difference. So, if I'm using like say for instance SPX, right? I'm gonna use this one real quick. So, watch the prices. So, if I go to SPX, today's 29, and I want to go for a call. Let's say call, whatever. I'm gonna just go for a call. I'm gonna just trying to just pick a random one. Some good value. I need one with some good value. Give me one good. 13,000. That'll work. Right. Red. This one. Cool. So if you notice the prices with SPX, they move by fives. They either move by fives or tens. So even if it's to move up one, you're already up like $5. So it's like they move by fives. So you once everything goes your way and you're banking on it, you're going like 5, 10, 15, 20, 25, 30, and so forth. And you just start doubling on your profits. So that's what I like about it. Now, if I was to use SPY, see SPY 9 times out of 10 to move by penny increments. See here, it just goes by straight 5 cents. See that? You go either 5 or 10 cents. 5 to 10 cents, it'll move like rapid. See that? Look at that. 20, that's 10 cents. 30, 40, 50, so you're banking way faster. But if I use SPY, they normally goes by penny increments. Let me see. Oh, come on. Why this thing acting slow? See, there we go again. I swear this thing be acting slow. This thing ain't built for me. It ain't ready for me. See how slow it's acting? This thing ain't ready for me. This thing ain't about that life. Let me see. Stone 8 days they got for spawn? Oh, there we go. I was about to say. I don't know why this thing acting slow. It's acting too slow. See what I mean? Look, I'm scrolling. Alright, this one got, damn, 84,000? Jeez. Let me see. Go to red. See? See how it moves in penny increments? See that? See, this one goes exactly by penny increments. See? 30, 31, 32, 33. It goes by penny increments. That's the difference between SPY and SPX. SPX normally moves between 5 cents, 10 cents, so you make way more money in a shorter period of time. Versus here, you just go by penny increments. So that's what I like. That's the difference I like between that. Yeah. So T Eddie, so you got what I'm saying on why I use why I use it. Oh, and Vet on why I use SPX over SPY. SPY moves in penny increments, while SPX move in 5 cent to 10 cent increments, meaning I'm making way more money in a shorter period of time. So that's what I like about it. Now, what do I look for when I want a good contract? Now, it depends. If I'm going for, let's say for instance I'm going for a call, I would normally I wait for a red candle. I wait for pullbacks. Something like here. When you got that pullback, that's when I would have been looking for a call, because as you get in that pullback, your contracts are starting to shift, right? These contracts are starting to shift. They start to change. So that's why I wait for it to get low, where I know my contracts are getting cheaper, but I'm going in with good value. So, for example, let me pull up SPX instead of SPY. Go to SPX real quick. All right, let me see if I can find one with some good volume today. I'm gonna utilize one of these again. Let's see, got 11,000, good delta. So this is how I got mine set up. So what I look for when I'm going for my contract, guys, and I already got it set up the way I want it. I'm always looking for volume, which I always look for about at least 10,000 plus. Um, Open interest, good little 5,000, so forth. You know.
Can you show us some good contracts to look?
Yeah, that's what I'm doing now, boss. I got you. That's what I'm doing, Trey. So,
Demet says, yes, got it. 0 DTE or 1 DTE.
it depends.
2 ATM/IDM or what strikes?
No, okay, it depends, right? So, if we got good volume in the market in general, where I know I'm not gonna get caught in a, if I know I'm not gonna get caught in a channel, choppiness, I go for the same day contract, right? So I go for the same day because volume there, I can easily get in, I can easily get out without getting caught in any choppiness. Because you already know what happens when you get caught in the choppiness. Your prices, your profits don't move at all, or you have a little small profit. It's not doing too much of nothing. That's why I wait for activities to kick in, then I attack immediately. I get in, I get out, then I wait for the next setup. So, for example, let me see. I'm trying to pull up one real quick. So again, me personally, what I do, but when I'm going in for my contracts, and again, this is how I have mine set up. You could customize this how you want to. Your list right here. This is how I customize mine. Volume, open interest, and delta. So deltas, I'm looking for over 30 and plus, because that means that the contracts are healthy. So I'm looking for good delta. I'm looking for good volume. I'm looking for good open interest. So for example, I'm gonna just pick a random one with good everything. This one got what, 9,000. It got 11. We're gonna just pick this one. Just pick this one, just for the sake of the argument. All right, see. So got good delta, good open interest, good volume. Look how healthy this contract is, right? So now you can clearly see how healthy the contract is. And what I do is, I would move this off to the side. What I'll do is I'll kind of play out the pattern that I see on SPY. So if I see SPY pulling back, that means I should be seeing a pullback here. Because you notice how my little crosshair line is matching right where it pulled back at. So that means that pullback here should be matching around my bottoms, right about this little area here. So that means that $5 we're holding. So $5 holding this strong support, right, as we pull back on here. So that means I could have been easily getting in at $5, but that possible push up to where? Because how high did we go? We had a high of $13.15. So let's do the math. So from $5 to 13, let's do the math. So we're going to just round it off. 13 minus 5, that'll gave you 8 times however many contracts. Let's say eventually you had, let's say 500 shares. 500 shares, you'd have came out with $4,000 that fast. See what I mean? see what I mean on how rapid SPX is and how much money you can make in a short period of time? You get what I'm saying? So it's crazy. And I mean, that was just off of this little one move. From what time? From 9:54 to 10 o'clock. So what, good little, 20 minutes ish? So you round it off 9:50 to 10, yeah, about 20 minutes. Not 20 minutes, I'm tripping. 10 minutes. But I mean, in 10 minutes, you would have made up to $4,000 that fast. $4,000.
How much was each contract?
It all depends. It all depends on what contracts you choose, the price of the contracts. So what you do is, you automatically, each one is 100 shares automatically. So all you do is multiply that times the price of the stock. That's how much money you have to have in your account. So if you want 100 shares, like on a $9 stock, you have to have $900, pretty much. So other than that, if you don't have that much, then you got to go down lower. You just got to go for a cheaper contract to it can fit to what you have in your account. So I mean, you could go from $12, $7, $5, $4, held all the way down to what, about 20 cents and stuff. I mean, but me personally, I wouldn't go that low. Really, I like to stay a little bit higher than that. I like to stay at least at about the 50 cents a dollar range if I have like a small account, because I want to be in a good area where my deltas, even though it's way down here in the fours, if it's a good day, those can move. So watch. Let me go for example. Let me go to one for example. Let's just say $1. Because how low were you before you went up to $1? Let's just utilize that one. So you were low as. So the original price on this contract before you went up was about 75 cents. Yeah, before it went on this spike. So if you got in around 75 cents, you'd have went up 175. You'd have been up $1. We'd have been up $1. Oh, am I seeing a pullback? Uh-oh. Uh-oh. Right back underneath that. Here we go, pulling back again. Here we go, pulling back, guys. Here we go, pulling back. Here we go, pulling back. Here we go, pulling back. See, I told you, Liz. What I told you gonna come down. What I told you gonna come down to. What I told you is gonna pull back to. I told you, like a magnet, it's gonna yank it right to it, to that 9 EMA. Was I lying? Liz, was your boy lying? Look at that lower shadow. Look where that 9 EMA is. I told you. You leave from it, right back to it. I told you. I told you expect it because you was going into a strong resistance area without no help and no support. Put it as I always talk about the car analysis. So basically, think about it. Let me put my chat back up before I finish. All right, think about it. 560 is your brick wall, right? You're a human, and you want to break a brick wall, but you know you can't do it by yourself, right? You need a vehicle, because that vehicle will protect you, right? It will help you, give you that boost in order for you to get that break that you need, right? However, you jump out of your car and run right into a brick wall. What you think is going to happen? What do you think the results is going to be? Are you going to break that brick wall? Or are you going to hit it and then turn right back around? So the reason why I say that is the same thing with SPY. So if SPY goes to run into a brick wall without this vehicle, which is that 9 EMA, you're going to hit that brick wall by yourself, get weak, because you're going to have to run right back into your car to help you with that assistance. See? Because any other time you was in your car, went on a nice little move. Anytime you was in that car, nice little move. Anytime you was in your car, nice little move. But when you jump out of your car and run right into a brick wall by yourself, that ain't going to end up good. You're not going to end up well with that one. So, yeah. So right now we are pulling back slowly back down to that. Let's see if they're going to continuously utilize that. Remember, that's that breakout area. Let's see, can those buyers utilize that 560.31. Can they utilize that 560.31? Because now that we've broken above it, it's no longer resistance. Now they can utilize that for support. So let's see, can they hold on top of this 560.31 level? So what we're going to do is we're going to change that green now, because now that belongs to the bulls, not the bears. So boom, change that green. Here you go. So let's see. We still got to break above 561.50 to 562. Those are going to be our areas that those bulls need to conquer. They did already conquer the 560.31, guys. So let's see, can they utilize this for support for that pullback bounce? Let's see, can we get it? Let's see, can we get that pullback bounce? Can they hold this 560.31 level? Because for NVIDIA, we didn't fell right back into this channel. We didn't fell right back into that. Then we already lost 120. So you're out of the 120 range, which could indicate more weakness coming. So we could be cracking at 119 back on down to that 517. I'm sorry, 117.50 to 115. So we lose 119. I can guarantee you we're gonna see, and I'm gonna put an alert just to show you I'm not lying. So we're gonna put an alert at 117.50. Go down 3 cents. Yep, below. Yep. All right, boom. So we got an alert here, and we got an alert at, what is this, 15.25. So if we do crack, that's gonna be the first alert on down if we can't hold. So I'm gonna keep that on watch just to see. And sorry for all the lines, guys. I mean, it's just matter of fact, let me do this because I'm trying to create less clutter with all these damn lines, and I do apologize for that. So let me just take this one off right now since I'm using a different time frame, so we can just focus on. Come on, there we go. All right, so we did crack that 126, came back on down, trying to hold on top of this 119. See, can we hold it? If we do crack 119, do expect us to see 117.50 momentarily. SMCI, you're getting rejected at that 50, that 50 SMA moving average. So right now you're coming back underneath that 443. That's indicating weakness because you can't hold it. So that's going to go back into resistance if we close out underneath it. So within 8 minutes, if SMCI cannot stay on top of that 543.58, I can guarantee you that we about to be pulling back lower, like way lower. And we're going to start first with 425. So we're going to start off first with 425 down to 420. So that's what we're going to do. So if we can't get back on top, we're going to utilize that on down. below. Yep, below. That's what I need. All right. Gonna utilize that on down, because that's gonna be the first start off. If we cannot get back on top of 443, on down to 420. So we're gonna have two specific alerts on this bad boy. And 220. I mean on 420. Alright, cool. Cool. So I'm gonna set this bad boy up. Alright, let's see. But if they hold it, I mean, we could definitely try to, you know, especially that trend line. We could definitely hold it, but let's see what's gonna happen. Can they get back above this 543.58? Where we at right now? 543. Man, this thing jumping. I'm looking at the prices, like, goodness. I didn't realize how bad the man, they like jumping. Look how quickly he got back up to 443 that quick. Jeez. All right, so uptrend as far as SPY guys is still holding. Uptrend is still holding at this moment. So right now that's still holding. We just got to get that break above that 561.50 for that possible push up to this 562 level. So we just got to get that breakout. Got to get that breakout, guys. All right, so I mean, anything, guys, y'all need me to go over? Like yesterday, we went over the Breaking Bad method, and we went over the Ely. Is it anything else you guys need me to go over, guys? I mean, right now we're just going into the live talks of the trading, understanding the patterns, understanding how to put ourselves in the right position as far as entries and exits. We looked at the options, how to choose an option. You know, like off of the volume, off of the open interest, off of the delta. So we picked that down pack. So what else do we need to go over, guys? We just talked about the candlesticks. We did talk about that. We talked about the pre-market prep. Anything else you guys need me to go over? Anything else you guys need me to go over?
Traedz says, choppy charts.
Okay, now choppy charts, which is what I hate. Ugh, it's a pet peeve.
I missed yesterday, but we'll go back and watch. Can you just tell us again your indicators?
Oh, okay, no problem. Yvette, no problem at all. What I mainly use, with the dotted lines is the VWAP. But what I mainly use outside of that is a 50, 20 EMA, and a 9 EMA. So that's mainly what I use. Now, when I see the crossovers like this, when I see that the 50 has lost its value and start to pull back, that's when you start to see more downside. But if you notice the crossover back on the upside, you notice that right here, when the 9 EMA and the 20 fell underneath that 50, what happened? You pulled on down. Now, as those two, the 20 and the 9, has crossed back over towards the upside, look what happened with the market. You go back up. So you did an indicator crossover. So right now, the indicators are on the upright side, which that should represent bullishness. So we should be seeing more bullishness coming because your indicators are on the upright side, your 9 EMA is in control again, your 20 is in the middle like it should be, and your 50 is at the bottom. So when you got those indicators sitting in the upright position that it's supposed to, then that normally indicates bullishness, pretty much. So that's how my indicators. That's how I normally use the indicators. Normally you should have the red, your 50 at the bottom, because then they are normally utilized at the bounce. It's kind of like a 200-day moving average on a daily, but this is used for an intraday chart. So normally when everything is in the right position, 9, 20, and 50, and you do get pullbacks, they'll normally utilize that 50 because that's like for a strong support when you go back on up. But then when you're underneath it, it can act as a strong resistance. Right here, for example, see how once your 9 and your 20 crossed underneath, look what happened. Now, instead of being a floor, now your 50 became a ceiling when you ran up and you came right back on down. See that? And right here, what it was, right here, we had that major drop right here. That was yesterday. Yeah, yesterday. When we crossed over here, boom. Try to go up, what did you hit? 50 and yanked it all the way back on down. But now, we had another crossover, now back towards the upside. Now we crossed over to 50 going up. Now it's at the bottom, 20 in the middle, 9 at the top, boom. And that usually indicates more bullishness coming. So, look at the setup. Uptrend, indicators looking good, top of the VWAP. That's representing more bullishness than anything. So, choppiness, chop. Traedz, something like this, you mean? Like this type of choppiness? Or something worse than that? Like this type of sideways movement? Something like this? Or you want something else? trying to find another one worse than that. I mean, I just seen. Wait, what I just seen one at? Something like this, like this. Yeah, we gonna do like these little choppy days, something like this, when it's kind of like just sideways. Trey, that's what you're talking about, boss?
Traedz says, yeah.
Okay. Normally, let me see. How can I put this? Yeah, normally on choppy days, that's normally when I play a channel. Okay, choppy days, I play like a channel like trading. So in other words, like let's eliminate, because we never went all the way back up to these tops. So let's utilize. Ah, damn it. Let's utilize that red one and bring it down some more. So let's bring this down here. Right here, where it makes a little bit more sense, right? Because you can see right here where it made a lot more sense. Now I'm gonna tell you what I mean by that. So here, for example, all we can do when you're in a choppiness, play the rotation. That's the only thing I can say, boss. Play the rotation. Now what I mean by that is, let me go to it. Now what I mean by that is, oops, Windows. Now you see where the red line is and the green line is, Trey? Because you only had this one move here, but the rest of your activities was down here. So this is what we're gonna focus on. But you see my channel setup though? You see the red line and green line, boss?
Traedz says, yeah.
Okay, so what you do is play the rotation. That's the best thing to do. Play the rotation. So you know where your bottoms is. So you see how you rotated from these bottoms to the top, from the top to the bottom, from the bottoms to the tops. See? But you notice the rotation, that's it. So when you go up to these tops, when you go to these bottoms, call. That's it. That's like the easiest way to do it, boss. That's like the easiest. You just wait for the tops. So wait for the absolute tops and wait for the absolute bottoms. That's it. Play strictly like that. Bottoms, tops. That's it. Because you can see right here where the impact is at.
Then you moving average are level.
Yeah, and then like I said, because if you can pinpoint the same resistant areas, it's easy to nail it, right? Because your activity is right here.
Edie says, not crossing.
Yeah, because if you notice that, look, your bottom's matching. Look at that. When you got bounce, look at that. Your tops are matching. When you get pull back. So if you notice, that's really all you do, boss. That's it. Because what it does is it gets you out of getting caught in choppiness, in more choppiness. Because especially when you're dealing with contracts, because when you get caught in the choppiness and you're not catching either the absolute bottoms or the absolute tops, then you got to deal with time decay. You got to deal with holding the contract for a certain amount of time, because especially if you're not profiting and it's not moving, it's not doing anything. And then what makes it worse is that the market get closer and closer to closing, your buys are fading. You're just a seller holding a contract. It's almost like holding a car that you're trying to get rid of and nobody want to buy it. So because buyers are leaving, because you got to think about it. What buyer in his right mind wants to buy damn near an expired contract coming up? Because that means he's going to be left with it. So that's how you have to think about it. So my thing is, catch these type of moves like this where you have a lot more activity. You know, when you see a lot more movement in it, like something like this, that's when you catch it. That's when you catch it. And then, how did I figure this part out? Pre-market. You can still lose pre-market. Look, go back across the board. Watch. See? All I did was do this. Right here, we see that red line. Go back in pre-market. Because what was utilized? This area here. See that? Bounce, 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 bounce. You clearly see that. Now go back across the board. Go back across. Look right here. Resistance, resistance. See that? That's all I did. That's all I simply did. And it just kind of told me exactly what resistance was going to be. So even if, put it like this, even if you miss this one, wait on the next opportunity. Because you already know what resistance is. It's telling you. So once you hit that one, okay, wait for the market to go back up toward that area. Try to go for another put opportunity. Boom, there you go. Same thing for a call. You missed this bounce here? Okay, wait for a pullback. Let's see if this same area going to hold. There you go. Boom, boom, bounce, catch it. That's it. That's it. See, I know what a lot of y'all guys' problems is, because I've been there. Trust me, I've done it. Y'all always trying to go for that first move. Don't do that. Wait on confirmation, because I've done that, especially when the market is falling, and you're not really understanding where that bounce is going to be. So it's kind of like catching a falling knife. So you're so quick to jump. Oh, no problem, boss. But yeah, play the rotation. Play the rotation. Once you start to, especially once this, like these areas test more than once, we went off SPY. Oh, it broke it? Oh, shoot. My alert went off. God, dog, where you at? Where you at? Where you at? So it hit it. I called it. Boom! I got one more alert to go. And hit my other alert. Called it. Called it. Told y'all. Boom! Called it, baby. I told you where it was going. Look. 562.23. Called it. Right in my line. I called it. I called it. I called it, guys. But yeah, and how did I know to kind of somewhat stay positive, like put them pretty much on the bullish side? The charts told me. Because right here told me it was bearish, right here. Then we went on a reversal on the upside. So not only did I see a uptrend, I seen a transition between the candles from red to green. Again, an uptrend. I seen a possible, now what I told you, a possible red to green where you start to test what? That same key area. See? That's all I did. I just went right across the board at this old area and look what we ended up at. Same area. See that? All I did was take the past and bring it into the present. That's it. How did I knew it was gonna hit that area? How did I know to set my alert for that specific spot? Why? Because all I did was take the past yesterday. Pre-market area where you got rejected at, and as we was going back on the upside, was telling me it's gonna pull up to that same key area, and boom, caught it. See? Easy. It's easy to call this stuff, guys. Play off the past, because your history can help you. The past chart history can help you out a lot, guys. And that's how I be understanding a lot of these movements. All I did was look at this price point here. Same key spot. Look at this. Same key area. Now the next area that I have on my list is 562.50 if we can get that push. And the reason why, because again, we're still on this trend line. So I'm just keeping on watch to see if we're going to get it. Now I'm not saying we're going to get it now. So I'm just keeping on watch to see when these buys going to push to give us that push above 562.50 to possibly 563.
TED says, so red to green move. Would you do a call $557? Or only when you get breakout?
Me personally, no. I would have called 559. Well, especially dealing with intraday because you already know how options goes. I would have looked at this bottom here. Would that happen in pre-market already where you caught that bounce? I would have gotten in somewhere around this area where you pull right back into this strong demand zone. Because if you notice in pre-market, that's where you bounced at. That's where your bias came in. Pushed it right back on up. And then you pull right back down to this same area here, which that's utilizing it. And then you're buying close to that trend line, which can act as a strong support and a strong bounce on up. So I would have got somewhere around that area, around this 559 area, and just been holding it. I'd have been holding this bad boy. Because your entry would have been way down here, because you'd have been protected as you went up. So long, again, your entry would have been way down here.
Okay, also your moving average are in your favor.
Yeah, exactly. Yeah. And look, had you would have got in here, based off of that trend line, because you would have got a trend line bounce, you would have got a kind of like a little double support line here. After you would have seen what happened in pre-market, we got that bounce here. And then you pull back to that same key area that's lining up right with that trend line. No problem, boss. Because if you notice that, you had like double the support, right? Because, again, not only did you have that 559.15, because you did your homework, you did your research to see that you bounced here, and you was going for a second bounce. Not only that, you had that trend line. You remember? I never changed my trend line. Trend line is here, and we pull right back to it. And I told you, get as close to that trend line as possible before you get a strong bounce back on up. Boom! Because you'd have been down here at 559, now up at 562. Think about it. You would have had way more reward than you would have had risk. Way more reward. And you still would have been holding till now. You still would have been holding all the way up. I want to see if it's going to hit my target. I want to see if it's going to hit that 562.50. That was my next target.
Says, Jay, this has been awesome. Unfortunately, I have to leave, but I'll watch the rest later.
All right, Queen. Now, thank you so much for coming through. I really appreciate that. That meant the world to me. Thank you so much. God bless you. I hope you have a blessed day, Queen. And we're going to keep it rocking and rolling. Thank you so much. Let me give me your shout out. Let me give you your sound off. Shout out to you, Queen. Let me shout out. Shout out to you. Shout out. Thank you so much. Thank you to all you guys. I mean, my second day, you know, man, I'm happier, but now I'm going to be more prepared next year, too. Or if we do another boot camp this year, I'm going to have a lot more stuff prepared next time, though. I'm going to definitely have a lot more stuff, you know, effects and just crazy stuff. We're going to have a lot of fun, guys. We're going to definitely have a lot of fun. But, yeah, all I did, guys, was just read the room. From yesterday's movement into today's movement. That's it. I seen that we came from a downtrend, transitioned from a downtrend now to an uptrend. And when I seen that, normally when I see those type of reversals like that, it lets me know like, okay, we could possibly see a red to green, because if we reversed it, we're trying to go back up to the area that we could not break out before. So that's what automatically hit me. Why do you think I put my line so perfectly right here, this area? Why do you think I had my line set here exactly? Because once I seen that reversal, I'm like, okay, we're going red to green. So it's trying to go back up to the area that we could not break out before.
You use 5 minutes chart to see trend.
I sometimes use it. That's crazy because I normally have a 3 minute. I forgot to change it because I normally have a 3 minute time frame set up. I normally have like a 10-3, something like that. I normally use a 3 minute because it like I can see the candles a little bit better to go in for like because you know how you can't really see it on a 30-minute time frame. So that's why I use a 3 minute time frame to see if I want to go for a bounce. To see exactly what pullbacks are at, where I can see the actual red candles within the 30-minute candle. So I would normally use a 3 minute for that purpose. So, to catch little areas. So I'm doing my research on my 3 minute time frame and be like, okay, what can I possibly get in at on my 3 minute time frame? So, this is where I, try to enter. Boom, 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 because I got that red candle. I'm going in on a red because that's one thing I don't do, especially if I'm going in for a call. When I'm going in for a call, like I don't chase the green candles. I chase the red candles. So meaning that I'll wait for a nice little pullback, and then you got a VWAP right here for a VWAP bounce. That way you bounced on the VWAP and you bounced on the open. So you had double the support. So as we pull back here, I'd have got in right here. I ain't gonna lie. After this red candle right here, I'd have got in right here, that VWAP. Boom. Because that's your first bounce, and normally your first VWAP bounce is your strongest VWAP bounce. So you can see right here, boom, VWAP bounce, ran right back on up. So that's why I would have got in there. Because like I said, I don't chase the green candles, I chase the red candles, because when you're chasing the red candles, that means your contracts are becoming cheaper. Your contracts are adjusting itself. So that means that I'm getting a better deal out of my contract versus if it's already in the air. Basically expensive, pretty much. So I would rather wait for the contract to get back cheap, where we can go right back on up. That's it. So I chase the red candles. Now for puts, I chase the green candles. I do the total opposites. So I wait for it to go up towards highs. So I chase the green candles on a put contract. And because I want my contracts to get cheaper and cheaper and cheaper and cheaper, and then that's when I ride it back on down. So puts, I chase the green. Calls, I chase the red. I just do the total opposite of one another. That's it. That's all I do. Yeah. Oh, let me guys. Sorry, let me run to the restroom real quick. I do apologize because I've been drinking coffee and water. I gotta use the restroom. But I'm gonna be right back, guys. I'm gonna keep everything right here in the open, and let me just give me something to drink, use the restroom, refresh myself up, but I'll be right back, guys. Give me about 3 minutes. 3 minutes, I'll be right back. But thank you again for your time and your patience. And again, I'm so glad I'm doing this boot camp with you guys. If there's anything else you need me to go over, anything else you need me to take a deeper dive into, man, because I'm here to help you guys. Whatever else you need me to talk about, I'm gonna come back and we're gonna go over whatever. I don't care if it's candlesticks, charts, whatever. Time frames, whatever you need from me, guys, I got you, I promise. I'll be right back, though. Thank you for your time. I'm back, guys. I'm back in the building. So, guys, anything else you need me to go over? Trey, Tiedi. That sounds like I said titty. Tiedi.
So if you did a call at dollar link you're in, can you explain how to get out of your trade? I've only traded small caps. Buy and sell, I'm out.
Okay.
If I short then cover, I'm out.
Okay. For a call wise, right? So I would have caught that VWAP. I'm gonna just show you for example. I would have caught that VWAP bounce, and I probably would have got out around that 561.50 because that is the $half mark. Because and only the reason why I would have got out like right here instead of holding it all the way up because of not knowing it was going to break out. Now, if you have like put it like this, okay, if you have 1,000 shares, you can exit half out because you're still taking some of that profit while holding the other 500 to see if it's going to run. You can do that as well. You can split it. So if you have 1,000, sell 500, keep the other 500 just in case it does run. So therefore, you're making more profit too. You add on top of the profits you already got, but you already locked some in. But if I was in like just going like a one and done type situation, me personally, I'm just gonna be honest, I would have got in off the VWAP because that's already around this 560-ish mark for that run on up to 561.50 because again that's a $half mark, not knowing if it's gonna break out or not, and I would have still took profit. I mean that's how I would do it because VWAP is like a I trust the VWAP. Like I love using the VWAP. VWAP I use that for bounces, things of that nature. So yeah, I would have rolled it from that 560 all the way up to the 561.50, the $half mark. Again, not knowing it was gonna break out because what happened before. You ran up to this 560.50 before and you pulled on down. We don't know if it's gonna break out. So it's like at least I know exactly what resistance is, right? So if I'm getting in around this VWAP bouncing area, like this area here, I can ride it up to here and exit out just in case. So like I said, but if you have 1,000 shares. Hey, man, don't start with me, man. I'll do this.
He says, I get that. I'm wondering on your Think or Swim. Can you run through a call and then out?
Can I run through a call then out? What you mean, boss? You mean like what? Like actually do it? You mean? I mean, I don't like chasing now because you way overextend off the VWAP. That's something I really don't like. I hate that. If I'm not catching that VWAP, I'm not touching it. But yeah, if I catch a VWAP, then yeah, I can easily do it. But when it's overextended off that white dotted line, which is the VWAP, when it gets overextended.
No, if you were to buy, then do you have to sell?
I mean, personally, I would, because you don't want to hold, especially if you're using the same day contract. I mean, yeah, I would sell because I'm not trying to hold on to it for expire, me not get paid. But yeah, because like I said, I use options. So I would literally get in and get out, in and out, because now that's somebody else's problem because I just sold it to them. I done made my profit. So, and all you gotta do is, that, like I said, just rinse and repeat. You see another opportunity, do the same exact thing. You see how you got that pullback bounce? Okay, wait for another one. Pullback bounce, do it again. Just as long as that trend line keep going, play it. Play the pullback bounce, pullback bounce, pullback bounce, because right there you're benefiting from it. Look at that. Pullback bounce, and then it's gonna be setting itself up for another pullback bounce. Obviously, because like I said, we are on an uptrend going up. So that means that every single time that we pulling back and those bears are moving in, you're trapping them. You're squeezing them out of their position. So that's why you get those nice moves on up. You pull back, you trap in those bears, boom, flush on up. Pull back, trap in those bears, boom, push them on out. That's it. It's this bad trap after bad trap after bad trap after bad trap. Because they keep trying to guess where the tops is and keep putting themselves in the wrong position. Especially the newbies that don't know how to go for puts or short sell. Because you don't you short sell up here. You don't short sell down here. Anybody know that? You catch this, not this. Then why would you try to short something at around a possible demand area where you're gonna get squeezed out of your position? So catch your tops. Stop, like a lot of them need to stop trying to catch these bottoms, think it's gonna fall all the way down. If not, if the market is still holding, see, a lot of them do that because they're overlooking the pattern. That's why a lot of them get.
TED says, on your Think or Swim, you go and look at what contract. I'm sorry. You meant okay, the contracts. I apologize. Okay, gotcha. I see what you're saying. I'm pulling it up right now, boss. I'm sorry. I apologize. Now I get what you're saying. I apologize. Yeah. So. Normally what I do is, like I said, I'll go for one that, and again, based off of my account, how much I have in my account, then I'll see how much I can go. So like, again, one contract is 100 shares, 10 contracts is 1,000 shares and so forth. So it all depends, because you have to times that times the price of the stock, right? So if, for example, if I wanted, let's just say $8 stock, right? If I wanted an $8 stock, I'll have to multiply that. So I have to do $8 times 100. Quick 400 on that pullback. Good for the day. Thank
Oh, no problem at all, boss, man. And shout out to you, man. Y'all deserve it, man. Let me give a shout out to y'all, because y'all been killing it, man. Thank you, man. Y'all the shit. Let me give y'all sound off, man. Y'all killing it. Man, let's go. Now, for example, T. Now, that's off of 100 shares, right? So that means that's one contract. So, if I wanted 500 at $8, how much would I have to have in my account? Boom, boom, boom. I would have to have $4,000 in my account to get 500 shares off of that. So you just multiply. That's really all you do. You multiply it to know exactly how much you can afford. You know, to how many contracts you can get, pretty much. So always start off with one, because you already know the 100 shares, and then you just start multiplying it. You just double it. That's it. Double it, triple it, quadruple it, so forth. So that's what I do. So if you want to go cheaper than that, then go with a cheaper price. If you want more than one contract, right? So if you want a $3 stock, that's 3 times 100. That's 300. Oh, it hit it! Boom, caught it! It hit my alert. Caught it. I told y'all. 562.50. Boom, told you. I told you. Hit my other alert. Alert went off. I called it. I told y'all. 562.50. I told you. That's what I'm talking about. 562.50, baby. In effect. Right now, look at that. I told you, as long as that uptrend holds, guys, I mean, just play the uptrend. Stop trying to short it. This is an uptrend. I would not be trying to short an uptrend right now, because that's the worst. When you're going on those type of uptrends like this, that's the worst time to short it, because it's trying to go to a specific price point. So all you're doing is getting squeezed out of your position trying to jump in on the short. Stop doing that. Quit. Stop trying to guess these areas. Quit that crap. So let's see. So let's use our charts again. Let's use the pass. Let's go up now. Since we didn't broke out this area, right? Okay, let's move up. Let's go up higher. So let's duplicate that one, right? And go to the next one. So where is this one at? This is around 563.40. So let's go ahead and do this. Let me stand that to the left. All right, right across the board. And let's go to 563.40. All right. Boom. That's the next area. Can you see we got stuffed at? Right across the board. Look where we're trying to go. Look where we're pulling up to like a magnet. So I got one at 397, and I also got one. I'm gonna put one at 63.40. That'll be my other alert. So alerts, we killing this bad boy. We killing these alerts, baby. Killing it. Proud of this team though, man. Shout out to y'all for killing this, man. Y'all deserve this. Boom. There we go. So I got two alerts. So I got one at 563.40, this old area here. And I got this 563.97. Now, why do I have 563.97? I'm going to show you why I have that. So if I go to my 180 chart, I can clearly see where you got stuffed at too as well. So if I go to 180 chart, I can clearly see right across the board this old area here. See that? Where it's trying to pull to like a magnet? That's the reason why I got that 563.97, because I use my 180 chart where it look like it's pulling up to like a magnet. You see it? See that? Look across the board. Boom. That's where you get. That's where you drop that, right? You right back up to that same key area. So that's why I have two alerts set on SPY right now. I got the 563 itself. Sorry, 563 itself, right? No, 563.40 and 563.97. If you round it, it means 564, of course. But yeah, so that's why I got two alerts. But I do my homework, guys. I use different time frames. I use a 180. I use a 30-minute. I mean, think about it. All I've been doing is using a 30-minute time frame, and I can see these areas where they're trying to go. I mean, you can clearly see it. Look at this. Old area. Look, right here. Trying to pull up to it like a magnet, guys. Come on, man. Come on, guys. Y'all gotta work with me, baby. Y'all gotta work with me. Y'all can see this. Y'all can see it. Y'all can see this. Let me see. What, boy? Come here. So everybody can say hey. And you go back in the room. Come say hey to everybody. Because you already know you keep creeping or I can hear you. Come here. Huh? Come on. You got some pants on? Oh, he did it again. Ah, crap. Let me see. Do you think it's gonna get stuck around 5? No, it's still pushing. Look. 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 Nervy. Am I saying it right? Nuvi. Sorry. Newbie. Hey Jay, what happens if a contract expires? Uh, in the money. If a contract expires in the money, um, you talking about if you're up or if you're down? Like, what you mean? I mean, regardless of when contract expires, I mean, yeah, because um, yeah, if the contract expires up, I mean, you still get out with a profit, but you're gonna still have to like for them to get you out. You still have to. It's gonna be like a little fee that comes out of that crap. Like you'll have like you'll get like some type of because the broker has to do it. So it's like it's like some little fee that they take out. Because even when you lose, they take out a fee. If I'm not mistaken, AR, am I right about that? If I'm correct about that, even if they up, because will they take like a little fee out, even though they are up, they'll still take like something out of that, because they have to close it out. Okay, strike. Okay, yeah. So if it's in the money, you buy at your strike price. Gotcha. Okay, gotcha. Appreciate you, AR. Thank you. At the strike price. Got it. And the reason why it was hard for me to answer that, no problem, Just. And the reason why it's hard for me to answer that, because I do my best to not get caught with an expired contract, because I'm in and I'm out. No, boss, I had to wait for my money to settle. That's why I wasn't able to trade today. That's why I'm still helping you guys. I'm coming. Jesus. But you buy 100 of them? Ah, shoot. Yeah, I'll be right back, guys. Let me go wipe him. He already called me to go wipe his little butt again. God, can't stand this crap. He gonna get to a point of wiping himself. I ain't gonna keep doing this. But guys, I'll be right back. Let me go wipe my son real quick, and I'm gonna be right back. Thank you for your time, your patience. If you have any questions, comments, or concerns, guys, do feel free to reach out to my mods at any given point in time. They're doing an excellent job, and mods, thank you so much. But let me go wipe this little monster's butt real quick. I'll be right back, guys. Don't y'all judge me. Don't you laugh at me. Daddy do this. Peace. All right, guys, I'm back. So just keeping this on watch right now. Keep it on watch. Let's see. Right now, we're trying to hold on top of that 562 level, guys. Still trying to hold on top of 562 level. Let's see, can we get that push back on up towards the upside right now? All right, here we go with this chat thing disappearing again. AR, you gonna stop making fun of me too. So let's see. All right, keeping us on watch, guys. Let's see if we're gonna hold this 562 level. Let's see, can these buys hold this level, or will we pull back down to this 561.50? Let's see what's gonna happen right here. Let's see, can the buys hold this key level? Right now, we're still on the uptrend. Everything is still uptrending right now. So right now, that everything looks like we're pointing up, like it's trying to go back up towards that 563.40-ish mark. So let's just see, because I mean, you still got room to come back down, because you're still on this uptrend, but you kind of are like in a sense. Let me see if it's overextended. Yeah, you're overextended. So we may be catching a pullback momentarily, because you're away from the VWAP and that 9 EMA, going into a strong resistant area. So if we don't get that push, we could possibly see a pull right back on down coming up soon. So keep your eyes peeled on that. If we don't get that push, we could possibly see a pullback coming. So just keep it on watch. Keep it on watch. And we cannot stay on top of that 562.23. We could be definitely seeing a pullback on down. Shout out to Deck on his $844 profit. Shout out to Deck. Shout out to the man, the myth, the legend. I got you, boss. Shout out to Deck. That's what I'm talking about. All right. So right now, we definitely keep this on watch, guys. Just keep your eyes peeled at this 562.23 level, guys. 562.23 level. Can we hold it? If we do lose it, we will come back down. Can we hold it for that possible push? Let's see what these buys are going to do. Can those buys get this push? Because right now we're at 562.40. So right now, let's see, can we hold this key level and push back up? Let's see, can we get that push? Still keeping this on watch, guys. Right now, look like it's still battling right around this 562.23 level. Look like it's still battling between the Bears and the Bulls right now. The Bulls are trying to stay on top. The Bears are trying to take it out. Trying to put you right back underneath that old resistance level, guys. Right here. Right about here. Look like they're trying to yank you right back on down. So, Bulls will have to hold this key level. We'll have to hold it. We have to close out. I mean, it's a 30-minute time frame. But, yeah, within 30 minutes, they're going to have to hold this. If not, I mean, again, the best thing to do for them is push away from this key mark. Push it up even higher to get away from this 562.23 level. Because if not, those bears will come in, those sellers will come in and try to pull you right back down as we did here. So keep that on watch. Still keeping this on watch. Just see, can we hold above that 562.23 level. Right now, we're getting a little weak right now. We're getting a little weak. If we lose that, we could see a possible pullback, guys. A pullback all the way down to 561.50. Possible pullback to 561.50. You lose that, you're pulling all the way back down to 560 itself. I'm sorry, it's 561. So keep this on watch. We got a long upper shadow. We got these upper shadows right here, that key mark, because they're not able to hold. The bodies of the candles are not being able to close on top of it. So all we have on top is the wicks, but the bodies have not crossed and held above it. So right now, that's still indicating a little bit of weakness right now. So we could be seeing a possible pullback, so gear up and get ready, because we could be seeing one if they cannot get back above that key point. So let's see what these buyers are going to do. All right, still watching it, guys. Still watching it, still watching it. Uptrend is still holding, though. Uptrend is still holding. So let's see, can they get that push back up to this old key area up here? This will be your old area here. So we can hold this 562.23. You got room to run up to this 463, up to this 463.40 mark. But right now, we're going right back underneath that key area 562.23, showing a little bit of weakness. Sellers are trying to take those buyers out at this key point, trying to pull you right back down, kind of like we did yesterday. So let's see, can these buyers now withstand? Can they now hold and fight against the same area that took them out yesterday during pre-market? So let's see, can we stay above this old pre-market high from yesterday? That's the goal. Got about, we still got some ways to go for this candle close out. I'm in on spy calls of 563. Should I hold or sell for the loss at this? What was your entry? What was your entry, newbie? What was your entry? Because never buy to those tops. Because right now you overextended. You overextended off the 9 and you overextended off the VWAP with room to fall back down to it. But if you're buying all the way up here, I wouldn't be doing it. And I wouldn't be trying to buy at these highs. Because you're buying right almost until like a brick wall if you're buying it right in this area. Because you clearly see across the board right here that we have not broken out. That's the same key area that took you out yesterday. So you got to be very careful. That's why I say the best thing to do is wait on pullbacks. Not buying to these top areas right now. Especially due to an overextension too. With room to fall back down. Yeah, I mean, you definitely take it. You have more risk than reward right now. So yeah, be very careful. Unless these buys can hold and actually give you the push, then you can get out. Even though take a profit, but I wouldn't be buying at these tops right now. It's kind of dangerous right now because you don't know this area if they're gonna hold. Excuse me. Now, if they can get back above this 562.23, hold this key level for that push on up to 562.50. You know, when we start to see higher price points, that's different. But the fact is, we're struggling to hold it on top of the 562.23 right now. So right now, we're just watching these buys to see can they hold above that key level. That's just the main thing that we're watching right now. Right now, we're at 562.30. So it's holding right now. Slightly, though. Slightly. Little bit of a struggle. Nothing yet. Nothing major yet. But do keep in mind that you are overextended off of that trend line with room to fall back down. So just keep that in mind. You are overextended when you have room to fall back on down. So I'm just letting you guys know. I mean, we're still in an ascending triangle pattern. But do keep in mind that we can always pull back and set up for like somewhat of a U-shaped pattern. So I just want you guys to be careful. Don't go chasing. Please don't go chasing. Yeah, so right now I'm keeping this on watch, guys. Keeping this on watch. See where we go from here. Yeah, so newbie, what was your entry? What? Because we didn't hit. We haven't hit 63 yet. What was the high? No, we haven't hit 63. So what was your entry, newbie? Like, where did you get in at? Where did you enter the stock at? I mean, if you're in a good level, you know, you can hold it. You know, if you got in a good entry. Like, again, 561.50, somewhere in that nature, you know, like somewhere in the lower area, but, or even back down towards the VWAP, you're in a good area. So right now it's holding. So right now we're pushing back up towards the 562.50. So I do have two alerts in mind, guys. I do have 563.40 and 563.97. So right now we're still holding. So I want to see if these buys can get this push up to this 563 level. But do keep in mind, We are overextended off of that 9 EMA and that VWAP. You're kind of floating in the air by itself. So it's really on those buyers to hold this. Because if not, you will pull back down again. Let me see. 561.90. Oh, well, that's not too bad. It's not too bad of an entry. It's just that you kind of like over. You buy. If you think about it, you kind of like buying like way up here, and everything is way down here. So you're kind of like in the air, like keeping your fingers crossed that these buys can hold. See, that's what I be talking about getting in overextensions. That's when you're kind of risking it a lot. So it's almost like it's putting you in a position of more risk than reward, because you really have no true support under you other than this 561.50. Because you got so much room to fall back down to this VWAP and this indicator if they can't hold. You will have room to fall back down to 561.50, back down to this 561 itself, where you will meet up with that 9 EMA. But that's if they can't hold. If they can hold, we can see a continuation push. But it's up to these buyers to continuously keep going. Because right now, the main thing to give us that confirmation, we need to get back above 562.50. Hold above 562.50. That's putting you in that $half range. Right now we're holding up at 562, trying to hold above 562.50. Let's see, can we get back above 562.50? That's gonna be one of the main things, because that's that $half mark. All right, 562.55. Okay, so far so good, newbie. So far so good. So far so good. We're just 50 cents away from the 563. So the main thing is to stay on top of 562.50, because that's the $half range. We have to hold that mark, because that can act as support and it can also act as a resistance. Because if we stay underneath that 562.50, they can actually start to block you underneath that 562.50 and push you back down. Because do keep in mind, we are still overextended. So you are still kind of risking it, because you got room to fall if those buys cannot hold. And plus that we get back underneath that 562.23. So it's kind of risky, because you're kind of buying in the air. You're kind of buying in an overextended area right now. So do be careful. I mean, please be careful. Put it like this. Because I mean, I know you don't want to do this, because you got in at 561.90, right? Put it like this. This is the only way I can say to get out and still get profit. If we cannot hold above that 562.23, get out. Right now we're holding above it, but if we cannot stay above it, don't risk it. Because you got to remember, 562.23 is a major area where those bears came in aggressive and yanked you down. So the whole thing is we need to stay on top of that. But the minute we start losing and we come right back underneath that, kind of be careful with that, because that means that's that area those bears are trying to reclaim again. But as long as you hold on top of it, you're good. As long as you hold on top of it, you're good. Remember, this is 30 minutes, guys. 30-minute candles. So right now, the main thing is to stay on top of 562.50. Right now, you're doing good. Yeah, no problem, boss. So right now you're doing good, because right now you're trying to hold above 562.50. That's the $half mark. Now you're only 50 cents away from 563. So now we just need another 50-cent push. So we want to start to see 562.60, 562.70, 80, 90 up to 63. So you're already holding on top of 563.23, 62.23. Now we need to stay on top of 562.50. Stay on top of that. We can start to push 50 cents up, closer and closer towards that 563 mark. So let's see. Right now, here we go. Here we go, newbie. All right, now we up 60. They need to hold it. They gotta hold it. Gotta hold it. Keep pushing. Keep pushing. Keep pushing. Keep pushing. They gotta hold it. They gotta hold it. They have to hold it. They gotta hold it, boss. They gotta hold it. Gotta hold it. Gotta stay on top of that 562.50. Gotta stay on top of it. Cause it looked like it was getting a little push at first, because he was pushing up to the 562.60s. So let's see, can we get that push? I mean, they got room to push. We just gotta get these buys to step in, because I know the buying volume is a little low right now versus on what we had this morning. You can see the difference right now. You can see how we had way more volume from 9:30 all the way up to 10:30. Right now, look at this little volume here. Volume is a lot weaker than what we had before, so that's why I want to see what these buys are gonna do. All right, newbie. Look like we're trying to go up to 562.70. We almost there, boss. We're almost about 30 cents away from that mark. Let's see, can we get it? Can these buys step in and give us that push that we need, boss? Almost about 20 cents away, boss. Almost 20 cents. Here we go. Newbie, here we go, baby. Here we go. We almost there. Let's see, can I get that push? Because the thing about it, too, you don't have to be perfect with it either. You don't have to get it right at 563 exactly. You know, if you feel like it's not gonna, break out. But right now we're pushing. Right now we're pushing. But I just want you to take profits with you when you have it. I don't want you to let greed overshadow your better judgment either, boss. Because I want to see you end up in the green. I want to see you end up with some profit. So right now we're 10 cents away. We're 10 cents away. We're 10 cents away. Let's see. Can we get that push, boss? Let's see. Can we get it? Let's see. We almost there. We about almost there. Let's see. Can we get it? We almost there, boss. We buy close. We buy close. But again, you don't have to be price perfect. That's what I tell a lot of people, because that's what a lot of people downfall is when they try to be price perfect. Like, stop trying to wait for the perfect. All right, here we go. Let me see if we're going to get it. But you don't have to try to wait for the exact price exactly. All right, let's see. 7 cents away, boss. 7 cents away. Uh-oh. 2 cents. 2 cents. 63. You got it, boss. There you go, Newbie. Newbie. Let me see. Yeah, 563. So Newbie, you should be out. Oh. Is it going to hit my target? Really, though? Really?
Come on, you can hide.
Say everybody hey.
Yeah.
Say everybody hey.
Hi.
Say peace. Go this way.
Baby.
All right. Now go.
It's that time.
Yeah, I know. Now go finish eating. I gotta finish my stuff. Go ahead. Go ahead, big boy. Bye. All right. Newbie! Ah, man. Newbie, tell me you took the profits. Tell me you got it. Tell me you got it. I was riding in with you, boss. You got it. You got it. I'm talking about, baby. That's what I'm talking about. Really? I don't need you to mock me. That's what I'm talking about, baby. Shout out to Newbie. That's what I'm talking about. Get that money. Get that money. But go eat your food so you go back in the room. Hush. Eat the food. Man, no problem, boss. No, man, thank you for believing in me, man. I mean, you made that profit. So shout out to you, man. Shout out to you. You nailed it. Go ahead and give you some love. You knocked it out the park. That's what I'm talking about. Shout out to Newbie once again. Shout out to all the other traders as well. It ain't hit my target yet, though. I have 563.40, so it hasn't hit my target yet. I mean, Newbie got his, though. Well, look, you got out just in time, too, Newbie. Look at that. You got out just in time. Look at that. For that pullback, baby. Shout out to Newbie, baby. Ooh. Yes, that's what I'm talking about, man. I love to see my team win, man. That's what I'm talking about. Go sit down and eat, boy. Jesus. So far, so good, guys. So far, so good. Boy, you got out right in time for that pullback. It look like we're going right back underneath that 562.23. So you got out just in time. Damn, it almost hit my target, too. I was waiting on it. I didn't touch it. I was waiting for it to hit my target. I was like, crap. Look where we at. Back underneath that 562.23, guys. We may start seeing that pullback now. That's been my problem. Get in and not getting out before it reverses. Nah, but you got it. Hey, shout out to you, though, boss. You got it. You got it. You had the confidence to get out. You nailed it. Congratulations, man. Shout out to you, boss. Shout out to Newbie. Shout out. And you got out just in time, too. Imagine you would have been bag holding. Talking about, nah, I don't want to get out at 563. I want 563.50. You know, you just holding on to it, and then next thing you know, boom, it's dropping. But you got it. Hey, you got it. So shout out to you. You profited. That's what I'm talking about. You profited. That's all it's about. Making that green day. That's it. Jay, I think you will see 553.50 target. I think so too, boss. Cause especially as long as that uptrend holds. Cause remember I told you guys, you got room to fall back down. Cause you got so much space to go up and down for the stock to to pretty much just give us some wiggle room. Pretty much, you got the space until you get to that final squeeze. It's gonna either drop or pop, one of the two. So yeah, we got some ways to go. Cause what time is this? That's gonna be around 3-ish. Before we get to this actual corner, 3-ish, by almost towards the market close, yeah. Towards the market close, guys. So right now, man, shout out to everybody, man, who's been killing these trades right now. I couldn't be more proud of this team. Let me give y'all another sound off. Y'all are doing an excellent job, man. Y'all are killing it. Not just that, man. Thank y'all so much for joining my boot camp. Thanks so much for learning so much from me. All I'm trying to do is give you guys confidence to become the greatest trader I know you guys can be, because y'all have it. Coin Engineer, you always throwing these random stocks at me.
TED says, thank you, boss.
Man, no problem at all, boss, man. Thank y'all so much for believing in me. And again, guys, if y'all are enjoying the content, y'all loving it, guys, do your boy a favor. Smash the like, subscribe, share, comment. I'm at 823 right now, guys. I'm trying to get to 1,000 subscribers so I can be a part of the affiliate program with YouTube. And I need you guys' help, so please do your boy a favor. Subscribe, because we're trying to get those numbers up to the $1,000 mark, so your boy can become an actual affiliate with YouTube. So thank you so much for everything. Thank you. Man, thanks so much, J Dub. Thank you so much, man. Appreciate you, man. Let's see what we got on next. Okay, not participate. Huh? I could not participate on your boot camp? Huh? What you mean? Wait. I could not participate on your boot camp. Only monthly paying? Wait. On where, engineer? What you mean you can't participate? Oh, you talking about because of accident? No, I got you, Queen. I'm messing with you. Stop that. Stop that. I was messing with you. You know I got you. Let's see. Like we got this. Trying to figure out these key areas right now. I'm trying to go across the board. I think like around 840. Almost like an 840 mark. From 840, you got room to still run to this 9. So right now, I'm trying to pinpoint it real quick. Let me see. Because right now you're on a bull flag pattern. I mean, right now it's definitely a bull flag pattern. You just got to stay above this $8, this 810ish range. Stay above, get back above 810 for that possible push up to 820. But right now it's on a bull flag pattern. It looks like it wants to keep pushing. Because right now we're hitting the high where you had a high of 813. So the next key area, as long as you hold this, put it like this: if we can hold 810, you got room to run up to this 820, which you already know is going to be automatic resistance that we need to break above. So I mean, it's on a bull flag pattern, so everything looks good as far as on the upside. It's only when you lose $8, yeah, you start to pull back down. But you're holding 8. We need to get back on top of 810 for the possible push up to 820. How high will be your long? What's your entry? What's your entry, Queen? Because I'm trying to find this high. Matter of fact, let me see on my 180 chart if I can see anything. Let me see. Hold up. Well, let me see. Let me see. I'm trying to get it from the 180 standpoint to see. Let's see. If we can see it from another, because you're above. All right, you're above this angle here. So the next, looks like the next key area would be here. It look like around, what is this? 774. Can't be right. Oh, 827. I see it. My fault. I was looking at it all type of wrong. I was like, why does the price look like lower than what it look? All right, 827 right here. Yeah. So, Queen. Yeah. That'll be the next key area that I see. Up to that 827, because that's where you had that major pullback. 827. You had a high of 850, but then you got stuff underneath 827, then you pull back down. So that'll be the first area, 827. From 827, you got up to this 850 mark. So that look like your two main key areas. If we could continuously keep pushing, that look like that's the main areas right now that's going to be on your way coming up. 827 and 850. Yeah, here and here. Because you have the body, where your body got stuffed at, that's around 827. And you had that high of 850. So that looked like that'll be the next intended target. So what I'm going to do is, let me set an alert, just in case, because I'm not going to be watching this one for long. So let me put 827 for one and 850 for the next one. Come on. All right, here we go. 827 for one. and 850 for the next one. All right, here we go. So I got it, Queen. I got it down pat. Yeah, so I got it mapped. I got it already mapped out. So yeah, 827 and 850 will be your main two resistance coming up. Once we cross over that 820 mark, you got to 827. So yeah, just keep that on watch. So I already got my alert set. So once we hit that, all right, back to SPY. What we got? No problem, Queen. No problem. Got you. So right now we are back under that 562.23. We're right back under that old resistance mark, guys. Right back underneath that old resistance. So yeah, definitely keep it on watch, guys. Keep it on watch. Oh, and guys, I will be back later on. I do have to run some errands today around lunchtime, so I will be out pretty much for an hour or two, and then I have to pick up my son's mom. But I'm gonna do my best to return back, because by the time I pick her up, because she get out at 2, which is 3 o'clock market time. So I'm gonna do my best to come back. At least I don't care if it's 30 minutes till to come back and jump back on live. To knock everything out, to help you guys out, set ourselves up for tomorrow. So right now, I got about 30 minutes with me, guys, and I'm gonna soon be rolling because I have to go run some errands and stuff, especially with my grandmother and stuff. But just gotta run a few errands, but I'll be back. But so far, I'm gonna do everything that I can. So that's what I'm saying. If y'all need help with any and everything, reach out to me right now, guys. Let me know what y'all need me to go over while y'all still have me. Like, what else do you guys need me to go over? We done talked about the charts. We done talked about the candlesticks. When they talked about the market prep, what else? No, wait, where's my PowerPoint? I just had it. Go back, quick access. PowerPoint. Yeah, so we talked about the pre-market prep. We talked about the options trading. Talked about entries and exits. Talked about the market up and down, and we talked about the candlesticks. So yeah, we went over these already. So is it anything that I'm missing that we need to go over? Because yesterday we went over the Breaking Bad method, and we went over the Ely. So we went over those guys. So anything else do you guys need me to go over? Like anything in particular, any lessons, anything like I said, charts, candlesticks, like anything else you need me to look into? We did talked about options already. What else do y'all need, guys? Because so far, I think we went over everything as far as the boot camp lesson. Because I'm definitely for the next one though, we're gonna take deeper dives into more things though. Because I wanna go even beyond that. Like, I'm trying to think what else we can talk about or what else we can bring up. Because we pretty much covered everything. Where can we go to watch your yesterday's boot? Oh, matter of fact, wait, hold up. I'm glad you said that, because all I have to do is take it off of unlisted, I guess. Oh, let me go to it. I think I should still have it from yesterday. I think I just need to make it private. Yeah, I just have to take it off of unlisted. Make sure I got the right one. Yeah, that's all I do. I just have to put it on private, Queen. So let me take it. Let me put it on. Put it on public. I'm sorry. The hell wrong with me. Public. There we go, Queen. So I got it. So I'm gonna send you the link. This is the one from yesterday. Here we go. Engineer, I got you. So it should be public now. I took it off. There it is. That's the boot camp from yesterday. Yeah, it was set on unlisted. That's why. I forgot to change it. Yeah, I forgot to change it. Take it off and put it on public. My fault. My fault. Candlesticks one more time, please. Like what, boss? Like in particular, Trey. Like, what you want to go over as far as candlesticks? Like what you need to know, boss. Like, because again, I want to help you out as much as possible. Like, what do you need to know in particular about candlesticks? Because we went over the opening and closes. We went over that. Because I told you I don't really focus on the highs too much. I mainly focus on the closes and the opens. That's how I deal with it. As far as candles, I look at patterns. You know, U shapes, cup and handles, inverted cup and handles, inverted head and shoulders. What else? Oh, H patterns. What else we talk about? Oh, N patterns. Because the different patterns that I look at. I mean, that I call out. Like we talked about this already before too. What was all the patterns we called out? The patterns we normally call out. We call out. Let me see. For bear. Okay, for like the bear market. BERM, bear market. Sorry about that. We normally look for, and this bear market, what we look out for as far as patterns. We look for an M pattern, M, that makes it look like a downtrend. So we look for an M pattern. We have an H pattern. We have, inverted cup and handle pattern. We have that. What other ones we called out? Got the M pattern, H pattern, inverted cup and handle. Oh, inverted head and shoulders. Not inverted, but head and shoulders pattern. So you got the head and shoulders pattern. You got that. And that's all for the bear market. I think that's it. And of course the downtrend descending wedge. Of course, the descending wedge where you're going to downtrend and then drop. You got that descending wedge pattern. Now, as far as the bull market, you have. Let me change that out. Put an L because that's gonna be bull. For the bull market, you got U shapes. You got cup and handle. You got an inverted H pattern where you do something like this, like the upside down H. You got an N pattern. You got W pattern. You got the W pattern that looks like an uptrend. And of course the ascending triangle pattern that we're looking at right now. There go your ascending triangle pattern. Inverted head and shoulders. You have an inverted head and shoulders. We do this, and go up. You got the inverted head and shoulders. Am I missing any other patterns, y'all? Engineering, y'all, am I missing any patterns? I think I called them out. I think I called them all out. I think I did, if I'm not mistaken. I'm really trying to think. I think I called them all out. Because right now we're on the uptrend pattern right now. Everything's uptrending. So yesterday, guys, for those who wasn't here, we did go over yesterday. We went over ELE yesterday. For those who were here, shout out to y'all for coming through. We went over what ELE was here. ELEE, environment, levels, entries, and exits. Again, as I mentioned, you have the market goes through 4 states of transition. You have the trending state, you have the ranging state, you have the breakout state, and you have the reversal state. Again, what is environment? Environment is simply the market structure, the context of the market. L is simply the determined price point of support and resistance levels in the market. What else we got? You already know what entry is. Entry is the desired price point a trader chooses to enter a stock. And last but not least, we have the exit, which is a desired price point a trader chooses to exit a stock. So that was our ELE that we went over yesterday. That was one of our lessons that we did go over. And we went over the Breaking Bad method, which was this. So we did go over the Breaking Bad method. What is the Breaking Bad method? Bad habits that stop you from becoming a great trader. What are those bad habits? You have having the wrong mindset, not having a detailed game plan, unstable work ethics, losing trade syndrome, losing money per trade, lack of track, LOT, and last but not least, the one that everybody deals with is not having enough patience. So we went over everything over those 2 lessons yesterday, and shout out to y'all for joining me, and shout out to taking heed and trying to better yourself as traders. But Trey, like I said in general, like what you need me to go over as far as the candles? I mean the patterns, again the opens, the closes. Like what do you need me to go over in general, boss? As far as the candles, because I mean we pretty much broke. Go in your room. All right, sit down. Go in your room. So yeah, so guys, yeah, we went over pretty much everything, even with the candles. That's what I was trying to figure out what else you need to go over, boss. I mean, I have no problem with it. Like, but what you want me to go over? Again, the patterns, the opens, the close. I mean, y'all know what doji candles are. We know what that is.
Traedz says, I got it now. And work screen behind.
Oh, okay. I got you, boss. Yeah, so y'all got about 30 minutes with me, guys, till I roll on out, because I got to go take care of the little one, too. So 30 minutes, guys. I had a fun boot camp. This was exciting. I got to witness y'all make money on the downside and the upside. Yesterday, I got to watch y'all make money on the downside. Today, I got to witness y'all make money on the upside. That's crazy. So yesterday, it was bearish. Today is bullish. So shout out to y'all for killing these trades, man. Y'all been knocking it out the park, man. But I definitely had an amazing time with you guys for this boot camp, man, and we're gonna definitely keep it rocking and rolling. I'm gonna try to, like I said, I'm gonna try to get here back as quick as I can, so I can try to do the normal live stream. So I'm gonna try to go run these errands, so I can do everything I gotta do, and try to come back as quick as I can to do another live stream, but do the normal live stream, you know, versus the boot camp, which I enjoyed. I loved it. I ain't gonna lie to you. I had fun. I had fun with the boot camp. But next time, what I want to do, I want to set it up better, man. I want to have like a little theme. I want to have like a little poster, you know, like how I have my intraday one. I want to do one for boot camp. So I'm gonna have to take some pictures. I'm gonna have to get, G'd up. Might have my hair out. but yeah, man, I definitely want to just be better prepared for the boot camp, because this was my first time, and I definitely enjoyed it, guys. It was amazing. Shout out to Deck, man. Shout out to the Tradecaster crew, to the family, man, for giving me the opportunity, for giving me the platform, for help surrounding me with great people like my boy. Who was that? Ty and Trey and T Eddie. Got y'all, Liz. Shout out to all of y'all, man. Y'all done came through, man, showing nothing but love. Who else I had in the building? Yvette. Shout out to you. Man, it's a blessing, man. Again, if y'all love the content, man, please do your boy a favor. Smash the like button. Subscribe, please subscribe. I'm begging you to subscribe. That's free 99. You don't have to pay nothing. Like, share, comment, subscribe. I mean, let's help get the algorithms up and running, because I'm trying to make this community expand, because I'm trying to be a part of the partnership program, the affiliate program. So, man, we can start doing great things. Well, not affiliate, but partnership. So we can start doing great things, guys, man. Because, again, I want to do more and more with y'all, for y'all. Because, I mean, this is y'all platform, too. So I'm about to go tend to this one, because he about to drive me crazy, guys. But, yeah, guys, if there's nothing else that y'all need me to go over, guys, I'm about to be gearing up. I'm about to go tend to him, make sure he eats. Appreciate you, boss. Appreciate you, man. Thank you so much. God bless you. Thank you so much, man. Thank you so much, Vet. Thank you so much. Why my little thing didn't come up then? My little alert. I mean, because normally it shows. Why it didn't pop up? Yeah, my YouTube alert is up. I wonder why it didn't pop up. It should have showed something. But yeah, you hear him making noise. I gotta tend to him, guys. I'm sorry. It's the part of being a parent, man. You gotta love it. But yeah, guys. If I don't come back, I mean, I will be gearing up. No problem, Trey. Like I said, man, I'm here every day. I'm here Monday through Fridays. Friday I stay half a day. Because the volume starts to change out. A lot of people are leaving, from their positions because they're going to enjoy the weekend. Hey. So yeah, but yeah, I'll be here tomorrow at 8:15. Hold on, guys.
TE says, market is closed Friday in Canada.
I'm sorry about that, guys. This little boy just drive me nuts. Sorry. But yeah, guys, I will be back in tomorrow at my normal time at did somebody hit me up too? I think I heard something. Oh, close Fridays? Oh, I didn't know that. Oh man, okay. Yeah, I do have a few guys in my chat that's from Canada too. Yeah, forgot about that. But yeah, guys, I will be back in tomorrow, and we'll be doing a normal live stream. I'll be back at 8:15. I'm sorry, 9:15 Eastern, 8:15 Central, and we'll be just doing our normal routines like we normally do, guys. But yeah, let me go ahead and get him situated. And like I said, guys, I had an amazing boot camp with you guys. Man, it was fun. We knocked it out of the park. I got to see you guys profit. I got to see you guys learn a lot more. And we're going to continuously keep, like I said, whatever information, anything you need from me, guys, do feel free to reach out to my social media. And I will put it out real quick while I do have you guys with me. So let me go ahead and put out my links. Sorry about that. Watch this thing not moving. So let me go ahead and put out my links. There we go. Brent, that's what I'm talking about.
Brand Creamer subscribed to YouTube.
That's what I'm talking about. Appreciate you, boss. I was waiting on it. I was like, why didn't it pop up? Like, that's weird. All right, I'm going to go ahead and put my social media links in there for you guys, too. So, let's see. Let me go ahead and put the social media in here so y'all have that. All right. I'm trying to push it. See why it's not, oh, come on. Well, y'all already got me on the YouTube, so let me take off the YouTube link because y'all already got me on YouTube. So, y'all already know what my YouTube is. TikTok, I'm not on TikTok. I'll take TikTok off too. I don't really use TikTok. I have it. I need to use it, which is sad. That's crazy how I have it, but I'm gonna just put follow me. I'm trying to, cause it don't let you put everything like you want to put. It's the only thing I hate. All right, cool. So I got that out, so y'all can follow me on all social medias. Oh, I forgot to take off the TikTok part. My fault. Man, no problem, Aussie. Thank you so much, too, Queen, man. Again, you've been doing an amazing job as well, too. I got you on the YouTube side, too, so I already got you as a mod. So thank you so much for everything that you do for me. Appreciate you, too, Queen. Thank you. But, yeah, guys, I'm about to rock and roll. Again, if there's anything else you need, do feel free to reach out to me. I done put in the social media links. If y'all need to reach out to me on any platform, I'm here to answer any questions you may have. And thank you so much for everything that y'all do. Enjoy your profits. Don't get greedy and put it right back into the market. Do not pay the market back. You take that money and you rock and roll with it. I will be back here on Fridays, guys. You already know Fast Cash Fridays. You know I'll be here half a day and so forth. But I had an amazing boot camp time with y'all. And next year, whenever you want to do another one, I'm definitely going to be gearing up with way more content, way more information, way more effects. I'm going off. I'm going all out. I don't care. I'm going all out for this next boot camp because now I'm crumped. I'm happy about it. I'm not nervous no more. Thank you guys for putting me at ease to where I can come talk to y'all about any and everything. So thank you guys so much. I appreciate you, man. This was a fun boot camp, and we're going to keep it rocking and rolling. You guys are freaking amazing. So you already know what I'm about to say before I head on out. Maximize your reward, minimize your risk. Always put grateful over greed, and you will succeed every single time. Till then, guys, I hope all of you have a blessed day, going into a blessed night, and we will be rocking and rolling on Fridays where we'll be making more money. You know how we do, guys. Y'all stay blessed, man. Peace.